Okay, so we should be live now on Instagram and on YouTube. Let me just check really quickly to see if that's actually working. So you cool first, if this actually works. Oh, there you go. It's actually working. Awesome. Very cool. There you go. Awesome. Cool. All right. Okay, so we're live now on a bunch of different streaming platforms and on Zoom. So yeah, welcome guys. How's it going? So today, as usual, we're going to be doing our live algo building sessions. But as you guys know, once a month we open this up to everybody so they can get a chance to see what it's like, right? So now we're also streaming on a bunch of different platforms, YouTube and Instagram and a few other things. So if you're not following us on YouTube or on Instagram or on Facebook, you should follow us and check us out there and do all the typical stuff they do on the platform, because we do this stuff regularly, and I want to start doing this more often with any of our like workshops that we do or anything that's open to the public. We do have things that are closed off for people that are paying customers, but for the things that we're going to be doing publicly, I want to start doing this on a regular basis, right? So make sure you subscribe to us, YouTube, Instagram, whatever your favorite platform is, and it will show up there. Cool. All right. Let's see here. Okay, cool. This is very interesting. Okay, awesome. So quick little disclaimer before getting started. It's for educational purposes only. There's not investment advice. We don't guarantee any future results. Please make sure you take your own personal responsibility for anything that you do, and verify independently through your own financial advisor or whatever it is that you need to do. Please read over this disclaimer, for all that kind of stuff. Okay, so this is what we're going to be doing today. This is what we do every week at these classes. Basically, every week we're inventing brand new algorithms. We're building cool new stuff, right? Today, specifically, this is what we're going to be going through, or at least this is the typical plan. We're going to be doing trading idea presentations. Everyone will get a chance to, basically pitch the idea of what we should be working on today. I got something that's been on my mind the past week, to say the least. I'll bring you guys up to date on what's going on there, because we've been getting some pretty amazing results. The back tests are really great, and it's been running very well so far. So we've gone off to a good start, but I'll show you guys that. And I know there's someone here that had a specific idea in mind as well. I think Alvaro, that was you brought that up to me, right?
Yeah. But I don't know if I'm ready to present it today,
Okay.
But definitely in some, if not today, in the future session.
Okay. All right. It's up to you. If you want to present it, we could do that. If not, it doesn't have to be anything formal, right? Could be something pretty straightforward.
Okay.
Yeah. Cool. So, let me know if you're good with that when we get to that point.
If it's not formal, then I can do. Yeah.
Yeah. Awesome. Cool. So first thing we'll do is that presentation. We'll do voting on what to build. Then we'll actually build the algorithm or modify the algorithm if it's something we've done before. We'll tweak it. We'll try to improve it in different ways. We'll have different parameters, whatever. And then if you guys want to get and run the code, you guys do have to be subscribers. So check out us on Lumiwealth.com. Either Pro Plan or All Access Plan is what you need to sign up for. So again, here's how it works. We do trading idea presentation. So, do you have any ideas to build anything? Do you have anything that you'd like to further develop? For those of you guys who are like on Instagram or YouTube, make sure you join us on Zoom. If you join us on Zoom, then you can actually present. We can't do any presentations through Instagram like that with other people. But if you guys join us on Zoom, go to our website, sign up to our newsletter. We send this stuff out regularly. Like I said, we do this class for free once a month. So yeah, cool. So presentations, then we'll vote. We'll do a little vote. Again, you have to be on Zoom in order to vote, right? Then we're going to actually build the algorithm. This is going to be myself writing actual code, and you guys can tell me what to do, right? Then we're going to tweak it, try to improve it, try to get better results. And then we're going to get and run the code, all right? Quick little sales pitch here. If you guys want to get the code for anything that we're actually using here, you like what you see, you want to actually use it, sign up to one of our plans, either Pro Plan or All Access. We'll give you access to this. Our Pro Plan is $3.99 a month after a $1,000 setup fee or $9.99 setup fee. You can get it at lumiwealth.com/Pro Plan. Basically, you're going to have access to these live algo building sessions every single week, along with the code. You're also going to get access to our entire strategy library, which has a lot of really amazing algorithms in there. There's some great ones that, for example, we've been working on. This one is one that's got me pretty excited. We got like almost 1,000% return with it, back testing. I'd say that's a pretty nice return per year. If I could 10x my money every year, I'd be pretty damn happy. I'll tell you that much. But there's a bunch of other ones that we have here. This one had a 79% return. This one, all these different tweaks. One that I personally am very interested in is this new one that we made. And where the heck is that? This is another one, 1,075%. This is Condor Martingale. But I do want to show you the one that we did last week. I want to bring that up because that one is pretty damn impressive. Where the heck? Maybe I closed that window. We got like a 400% a year return with it. Did I post it in? Let me see.
Robert, are you sharing your screen right now?
I am. Oh, you know what? I am not sharing it with Zoom. Sorry, I need to remember to do it with both of these services here. Can you see it now?
Now we see it.
Now you see. Okay, perfect. Awesome. Sorry, I pushed one. I forgot to push the other. This is one that we made last week. I told you guys I was going to start running it. I didn't pin the back testing results. But so far, it's up a little over 2%. Actually shot up like crazy. If you guys see that here, I don't know if you guys have been watching it, but it went up like $25,000 in a day. It's like, holy shit. It's pretty wild how much money it made very quickly. It's still up quite a bit. It's not up as much as that, but I would expect it to actually continue to do this sort of thing if it follows what our back tests have. And again, I'm trying to show, where the heck do I have that?
So 25%. So you putting, so all the money, basically you bought all the money?
What do you mean?
25% return? Is that how that worked?
25% return. I got a 2% return over the past 6 days or so.
No, but the first day, right? The first day.
Yeah, the first day. Yeah, the first day just shot up like crazy, and I think that's because of the martingale nature of it.
Happen?
So I think because it lost the first day, it put down more.
Okay.
Yeah,
So
it put more options, and then it made a big win, right?
I see.
And then it lost, and then I think I think it actually won today, right? Because it says won money on the last. It says Condor, but should be spread. So this actually should be up tomorrow. I can actually check this account. What account is this? We can see how well that's doing because it's up quite a bit. Well, I actually we'll get to that in a second. Let me just finish going through this first. So strategy library, you're going to get access to a lot of really cool stuff, including these ones they're getting really impressive results. We have ones that will like have 1,000% back test. We have a bunch of other things in there, and it's growing every week because every time we do this every week, we add to it. You also get access to our workshops to help you set everything up and kind of know what's going on. You get our trading signals so you can follow along with what's been going on here. Here's like different trading signals. Here's the longest one that I've been running. This algorithm's up quite a bit, 42% since I started it. So I'd say it's a pretty nice return. This is a diversified leverage algorithm. We could watch a bunch of other ones, like how's our crypto B bands one doing? You could watch that. You could watch a bunch of other algorithms and how they're performing. Cool. And then you also get access to our Discord community where we talk a lot with other people. And if you want to, get to know other people that are building algorithms, that sort of thing, we have a very active Discord community. You also get access to our Python for Finance course and our Algo trading course. So you can get access to all that, right? That's our Pro plan. Our All Access plan has everything that I just described. All those algorithms, all those things are like making, a bunch of money. And you also get all of our course recordings. We have a bunch of different courses that we sell. You get our options course, our algo course, our AI for trading course. You get a bunch of that stuff. And then you get a bunch of one-on-one time per month. So we actually help people out a lot that have the All Access plan. I spend a lot of time with these people. If that's you, then you know what I'm talking about. And basically it's full service. We can set everything up for you if you don't want to like do anything involved. All this stuff is really easy to get set up. If you guys want to, for example, as a quick little thing, if you wanted to run one of our algorithms, just to show you how it looks like, where the heck is that address? Why is it not popping up now? Our strategy library. It's usually this pops up in my browser. Where the heck is that? Do you guys remember what the URL is for the strategy library? Something like that. There it is. Okay, Lumiwealth strategies. Okay, so let's say you want to run one of these things. It's very simple. You go into here. This is a bunch of our different bots that we have running here. You can see we have quite a few of them in here. If you sign up to our programs, you actually get a lot more than all this. So you get quite a few of these different bots. These are all different bots running different things, doing different things. Let's say you want to run the Condor Martingale. You'll click into that one. You can scroll down to the bottom. You can see basically the back testing results. This specific configuration is 144%. We do have configurations that are over 1,000%. They're riskier, but they do some pretty crazy stuff historically. Let's say I want to run this one, 144% a year, historical back test. Then I'd basically click on the run on Replit button. All you do is click on that button. It will load everything up into the service called Replit that allows you to run everything, all these bots. And then once that loads, which takes a few seconds, you'll go into your secrets and then basically just copy over your Tradier access token. So for example, this is working with a broker called Tradier, right? They're actually a fantastic broker. People ask me all the time, do we work with your specific broker? Tradier is a fantastic broker if you want to trade options. For example, these strategies are option strategies. It has free trading for $10 a month, which can literally save you hundreds of dollars in trading fees, which is why we use them. They're a fantastic broker. Really quite happy with them, especially in terms of fees. But let's say you want to connect to these guys, right? We'll go into Tradier. You'll log in. For example, we do work with other brokers, but this one is the one that I definitely recommend. Put in your key, Tradier access token, and then actually go to the broker itself, get your access token, right? It's under settings, type it in, right? And then you add a new secret, and then you'll add in your account number, right? So here you get your Tradier account number like this, and then you actually go into Tradier and get that account number, type it in, and then you hit run, and that's it. That's all you need to do to get this thing to work. It's very simple. Literally, you just click that button, fill in your account number and access token, and you're off to the races. So it's actually not complicated at all to run this stuff. We spent a lot of time making this a lot simpler. Someone asked a question here, Kapil on Instagram. You asked, does it work in Canada? Yes, it does. You could work in Canada with a broker called Interactive Brokers. I've actually spent the past few days trying to get that set up. But it can run off your computer, you can run in the cloud. So if you want to do this, yes, you absolutely can do that. It's a slightly different process, but you'd have to use Interactive Brokers because Canada does not have any brokers that have APIs where we can actually trade with them, except for Interactive Brokers. They're like the only one that supports that across the board. That means any kind of trading bot to get anywhere. They're really the only one other than crypto brokers, but that's like a different category. Crypto brokers, they all have APIs because they're all good brokers. Does it work in Dubai? Yes, it does work in Dubai. Actually, you can make this thing work in Dubai if you like. Absolutely, same thing. You'd use Interactive Brokers. And hey, Deepesh, how's it going? I haven't seen you for a while, man. Hope you're doing well. Cool. Okay, so that's the spiel. Sales pitch. That's enough. Let's get into it. So as I was saying, let's work on that first phase, right? This is what we're doing today: trading idea presentations, voting, building an algorithm, tweaking, and then getting and writing the code. So first thing, let's talk about the trading ideas. One that's been on my mind has been this one right here. When we back tested it, we got a 437% a year return. As I said, I've been running this for I think 5 or 6 days now. It's up 2%. It shot up like crazy at one point in time. I think this is going to have this kind of effect where it goes up and then goes down, 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 and shoots up, and then goes down, 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 shoots up. That's kind of the pattern that I would expect with it. You can see kind of that's what it looks like on the graph, historically speaking, that it falls a bit and then shoots up, falls a bit and then shoots up. That's just kind of how it seems to work. So yeah, this one's up 2% in about 6 days. It was up like 20% at one point in time, which is pretty wild. If you're interested in what it does, basically what this does is it invests in a debit spread with call options, meaning it buys a call option and then sells another call option at a further out delta or a further out strike price, right? Further out of the money. So meaning that you're basically buying a call option on the cheap because you're getting money back, and then you're paying for this thing. So it's a bit of a cheaper way to buy a call option, and you're basically betting, okay, is the market going to go up today? You're just doing that literally every single day, right? So you're saying, is the market going to go up today, or do we think the market's going to go up today? We're looking at things like the VIX to kind of check if there's any crazy things going on. We look at something called the VIX 1 day specifically. It's this indicator here, VIX 1 day. Spelled that a little wrong. VIX 1 day. Right. So this is you guys may have heard of the VIX, right? The volatility index. The VIX 1 day is specifically using 1 day to expiry options. So meaning it moves a lot more than the VIX does. So if we compare this to the VIX, they're pretty damn correlated. I'm just going to go past, let's say 1 year. But you can see the blue moves a lot more, right? Like it shoots up and down a lot faster. So when we've back tested this with other algorithms, we found that the VIX 1 day is actually more predictive of whether there's going to be a chaotic day rather than just the VIX, which moves slower, right? So we use the VIX 1 day to say, should we buy call options today or not, or put on the debit spread? And then if the debit spread works out, that we have a take profit. And if it takes a profit, we won that day. It should be a nice return, get a couple percent for that day. If it doesn't hit that take profit, then we consider it a loss and we go through a martingale schedule. So this is our schedule here. Let me pull it up. Where the heck is it? Option spreads, martingale. There it is. We go through the schedule that looks like this. Day one, we buy 5 put options or 5 calls. If we lose, we increase that, we triple it to 15. If we lose, we triple again to 45. If we lose, we triple again to 135. If we lose at that point, then we reset everything, go back to the beginning. But the reason why we're doing this martingale, this sort of thing, is because it creates a much smoother looking graph. And that's also what's able to produce these crazy returns, right? Because you'll win today, for example. That's great. You got a profit. Nice. But if you lose, we want to try to make up for that loss. So then the next day, we're going to put down more call options to try to make back that money and still take a profit, right? So that's the idea behind this. Super high return, very low drawdown. This is even more impressive in my eyes than the return itself, because you can get pretty high returns if you're taking insane risks. This one doesn't have a crazy drawdown. The biggest loss that it had over a 1.5 year time period was only 15%, right? Which is, I'd say that's even more impressive than the annual return itself. Okay, cool. So that's an algorithm that I'm personally super interested in. Anything else that you guys would want to work on, or any comments or thoughts about any of that, or questions or anything?
Hey, this is Stacy. I have one. I had posted it inside the chat. Let me put it up real quick.
Yep.
So I want to know, this is the Condor martingale. If I want to exit a position and say, for example, if I do a sell to open call option, can I do I want to submit a buy to close order before the option expires? So basically, I'm getting out of the trade.
Okay.
How can I do that? So I tried, but it would not execute.
Yes, I mean you'd have to change the code to do that, right? So you'd basically,
So are you talking about the bot itself, just the?
or are you doing this manually, right? Do you want to do this with
No.
code or you want to do this manually?
No, I don't want to do it manually.
Okay.
I want to do it. I want it to be automated. So basically, say for example, if the option is going against me, and I don't want to wait till I'm assigned,
Right.
I want to get out of it.
You mean you don't want to wait until they expire?
Right.
Yeah.
To expire.
So this is a different strategy that he's asking for those of you that are wondering what the heck the question is about. This is another strategy, our Condor Martingale strategy. This one we've been running for a while, getting some good results. I know some people that have, doubled their money in a very short amount of time using this. Yeah, so to do this strategy, if you want, it's meant to hold till expiry. And the reason why is because I think the metrics work out better for that. But let me see. I don't think we had it that it's just a configuration. Yeah, no, you would actually have to modify the code to do that. So modifying the code, what you would do is you would have something along these lines, like checking the time. Right?
So if you go to the chat, go to the live algo building session. I posted a screenshot of what I did.
Okay. Let's see. Wrote some code. Position. Close iron condor. Okay, that sounds about right. Buy or sell. Yeah, that seems fine. What you might want to do though is you first want to buy back and then sell, because you might have problems with your margin.
So we say we got back because I already own it. I own it already.
Right, but so when we enter the position, first we buy and then we sell, because otherwise we're gonna have margin issues with margin because you're gonna be short selling options naked, right? So you're gonna have some issues with that. So you want to first go through and close all your sell positions, buy them back, and then you want to close your buy positions, right? Or else you're gonna have margin issues, right? But this looks fine to me. I mean, what is the issue that you're having?
So if you look at click the first one. So get out of here.
Yep.
And then not that one, the one to the top right.
Yep.
Yeah. Now, those are the positions that I currently have.
Okay.
In the back test. But I want to do a reverse on it. So, for example, the one that says the very first one, the 533, that's a what's it called? That's a sell to open. But I want to reverse it and do a buy to close.
Okay.
And so if you look at the second piece of code, not code, but yeah, that one. That's the reverse of it. So that is you look at 533. Yeah, I did a buy, but I want to do a buy to close.
Okay.
But it would not execute correctly. It executed, but it did not get me out of all four legs of the back testing.
Yeah. So my guess is because you're not selling first or buying first and then selling, you probably got rejected. Did you see your broker if you got rejected?
No. Well, this is during back testing.
Okay.
So I did not run it
during back testing.
live. I wanted to get it to run because I'm selling the option. So basically now, if I did it manually, all I have to do is just do the opposite. So if I did a sell to open on a call option, and I want to get out of it, then I would manually do a buy to close to get out of it. And I want to do the same thing within the code.
Yeah, so this looks fine to me. I mean, what issues are you having here?
when I go back into the trading iteration, it still shows that I have those options open. It doesn't close them out.
Okay. Are you sure this method is getting called?
Yeah, it's getting called because I'm stepping through it. And it even goes, even when I do the submit order, it goes through it.
Okay. I mean, and the submit and the orders are correct.
Yeah. So if you go to,
Like this is it, right?
yeah, that right there, that's the
Yeah.
order.
I mean, this looks fine to me. I don't see any issues.
Okay.
I mean,
Yeah.
I don't see why this wouldn't work.
All right.
I mean, if you want, we can kind of step through it together at some point, but
Yeah.
as far as I can tell, this is all fine to me. And you don't have to submit them in different orders because you're doing is multi-leg true. So
Right.
I don't see why this wouldn't work. You know, you have the orders there, you're placing them, you know.
So this is like you're attempting to do a stop loss, basically.
Yeah, stop loss.
This is stop. Okay, I see. So is this? Do you have a built-in stop loss thing, Rob, or this is the way to do it, basically?
We don't have a stop loss built in yet, but this would be a good approach for it. This would be, you know, this isn't the hard part. Exiting the position isn't the hard part. The hard part about the stop loss is that you need to determine whether that stop loss got hit, right? So we need to do some calculations there. It's not anything too crazy, but you know, that's the harder part of it, you know. Yeah. Okay. Yeah, I mean, I feel like that would actually work pretty well if you have like a stop loss. I think that could be a pretty successful way of going about doing this because you know, it could prevent you from going down a pretty crazy trajectory, right? But yeah, I think that'd be an interesting thing to try out with the Condor Martingale, setting up a stop loss.
Yeah.
Yeah.
So that's I would like to propose doing that.
Okay. Okay.
As a suggestion.
Okay. So I'll put this up. What do you want to work on? Right, and I'm going to put this into our thing. So we'll say Condor Martingale is one of them, right? So we could work on stop loss among other things. We could do that too.
Yeah.
We could work on the spreads Martingale, which is the one that we did last week. I'm personally super interested in that one and wouldn't mind improving on that because we got some pretty crazy numbers. And I personally think, you know, we got numbers last week that were saying, you know, we can make like 400% a year potentially, or at least back testing. That's what we got. But I think that and this is just like our first round on it. Like we spent so much time on the Condor Martingale that we were able to get it up to a really high percentage. I have a feeling that we could probably get this thing well over 1,000% a year. That's what I think. Just tweaking the parameters, improving it a little bit. I think we can probably get to that point. So yeah, so we'll put that in there. Spreads Martingale. Anything else you guys want to work on?
So for this strategy, you are buying the spread?
Yes, we're buying a debit spread. Yes. So buying a call and then selling another call out of the money.
So it's only long only?
This is long
spread?
only. Yes, correct.
Isn't that a bias because the market is going up, right? Do you have any indicator to, besides the VIX, to tell you the direction of the market for next day?
Right now we're only using the VIX. We have not added any other indicators. No.
Mm.
Yeah, which I'm open to. I mean, if you have some indicators I think can predict direction, that'd be interesting. You know, I feel like that's a pretty hard thing to do, to predict what's going to happen in the S&P the next day. But if you have some ideas, I'm open to it. I think it'd be interesting.
Yeah, I do have some ideas.
Okay, cool. Yeah.
If you want, I can mention right now.
Sure.
So, so you take today, let's say 30 3:45 p.m. and you look at 5 or 10 minutes intervals from 9:30 a.m. until the time you are evaluating. So you have, if you do 15 minutes, you might have like 25 points. If you do 5 minutes, you might have like 80 different points. And then at the time you are evaluating, you also need to have an indicator that goes from 0 to 100 or from 0 to 10, independent from the price. And maybe you can have another variable like day of the week or something like that. So with those 3 conditions, you scan the market historically, and you tell them, find me, since you are using low time frames like 5 or 15 minutes, find correlations above 70% from 2010 till today. So you will get maybe 20 days. Now, out of those 20 days, that's your first filter. So you got 20 days where you will have projections, right? Because let's say you found a very similar day that happened in September 2017. 18th of September 2017. So you know what happened on 19th of September 2017. So you will have the projection. Right now, so you have your first 20, and then you can make another condition to aggregate. Let's say you calculated the RSI today at 3:45. Let's say it was 51. Then out of the 21 you chose, you look at the RSI of those, and you see some of them, they will have the RSI at 20, some of them will have it at 35. Then you reselect out of those 20 the ones that not only have similar correlations, but also have similar RSI or whatever indicator you want to choose. And then let's say you're left with 10. And then if you still don't have a clear direction out of those 10, out of those 10, all of them are going up, then you take that direction. If out of those 10, you have, let's say, 8 going up and 2 going down, then you can choose put another variable like day of the week. And then you pick out of those 10, 7 happen on the same day that you are analyzing. And it happens out of those 7, 6 of them are going one direction, and then you make your decision. The market is likely to go up. Why? Because I scanned historically and I found very similar conditions to what happened today. And that's my indication to go up or down. Now, since you are using only one day on the 5 or 15 minutes data, the indicator you are choosing, it has to be more than one day. So if you're doing RSI for the 15 minutes, you cannot do 27 points. You go 50 points. Why? Because you want that indicator to give you an idea of what's happening on the market, not just in one particular window of time, but during the past 3 days. So then you would create a signal, buy or sell at 3:45. And if you don't like the signal, you can use different indicators. You can basically create a logic on how do you want to aggregate, and then you just count. If 5 of them go up and 2 of them go down, then your probability of going up is higher. And then test how it goes. That's my idea.
Okay. So I guess to paraphrase, is you're looking at a bunch of different indicators and you're seeing how they have done over the past 30 days. And if that
No.
correlates with an update, then you buy. Is that correct?
No, that's not correct. The indicator doesn't matter. What you want to get is get the picture of what's going on today. And to get the picture of what's going on today, you have to correlate the movements from, let's say if you're using 15 minutes, from 9:30 to 3:45, you will have 27 points. 27 points moving. So you take that list of 27 points and you correlate it between 9:30 to 3:45 for every year from, let's say, 2009 till today. And then you will have on those 27 points a correlation that are very similar and others that are not. So your first field, let's say you have 200 correlations that are above 70%. So then you work with those days. It will be in different years, in different months. Out of those 200, you have similarities to what happened today. Now you add another variable. You add the RSI out of those 200. And you look at the RSI today at 3:45, and you see the RSI today is 35. Then your second filter out of those 200 you look to the ones that are around 35, because out of those 200, you will have RSIs that are 60 or something. Why? Because the RSI, it has to include data outside the day. It has to go back 3 or 4 days. So the correlation gives you the instant of the day, 9:30 to 3:45. But the RSI or any other indicator gives you information from that day, but also from what's going on the last 3 days. And that gives you a number. And then you try to match that number historically. So you make sure you end up with, let's say, 10 or 7 days historically that are very similar to what happened today. And how do you know they are similar? Correlations are similar, and the values of the indicators at 3:45, they were exactly the same. So that means that the market in the last 3 days did the same thing. That's how they end up being 36, the RSI. Now, you need to use indicators that are not price dependent. You cannot use Bollinger Bands, for instance, because if the price in 2009 was 2,000, Bollinger Band will be in terms of 2000s, and today is 5,000. You need to use indicators like the RSI, which are normalized from 0 to 100, so you can compare the different days. That's the idea, my idea.
Okay, all right. So it sounds like there's a bunch of steps involved. If you want, we could try that out on the spreads. I feel like that would make a lot more sense on spreads because you're trying to predict a direction, right? If you want, we could try that out today. That sounds interesting to me. Sounds a little bit more complicated. There's definitely a lot of steps involved in it, so it'll take a bit of work to do that. But definitely sounds doable. Right? So yeah, if you want, we can try that out, and see if we can get some good results from it. Cool. Does that sound fair? Is that something you'd want to work on for like the spreads thing, or do you have like a specific strategy in mind that you want?
No. The spreads would be good. Yeah.
Okay. Cool. Awesome. Okay. Cool. So that's part of one of these strategies. We have 2 up here that you guys can vote for: Condor Martingale or spreads. Anything else you guys want to put up there that you'd want to work on today?
Hey, can Stacy just, I'm sorry, on the Condor Martingale, can you just like paraphrase what we would be working on? I'm sorry, I joined a little late and I got the tail end of it. I apologize.
So the question is what we'd work on for the Condor Martingale.
Yeah, that's right.
We have a long list of things to work on.
Okay.
So
I know Stacy was explaining a scenario that that's what I was cluing in on.
Yeah, it was just a stop loss. So basically, once the price of the option starts to go against me, then I want to get out of it instead of waiting for the option to expire.
Fire.
Because I want to minimize my losses.
Yeah, got it. Okay, that's what I thought I heard, but thank you.
yeah, so stop loss is one of those things. We also have a pretty long list of things we want to work on with the Condor Martingale. Here's some of them. So close a condor when it gets challenged, stop loss, that's at the top of our list. Another thing is to use the open VIX value as opposed to the closing price, because we're using the closing price from the day before. Maybe the open of the day of would give us better results. Analyze what it would be like to take out money periodically. We could do that. We get to work with SPX because it only works with SPY right now. There's a bunch of stuff here that we can work on, different deltas, right? So that's a couple of things we can work on with the Condor Martingale. With the spreads, I think we have a lot of things we can work on too. I don't think we wrote down our to-do list. Oh, there it is. So a couple things using the regular VIX, trying different assets. These are some that I wrote down, by the way. I don't think you guys were part of this, but I wrote a couple of these things down. I know we talked about them at the time. Basically you can see that we have a couple of things here, right? We could go through longer term with the VIX, right? Instead of using VIX one day, which has only been around for a year and a half, we can go back further. We try using multiple assets. We're really just using SPY right now, but we could use other assets like QQQ, IWM, bonds, TLT, gold, silver, Bitcoin. You know, there's a bunch of stuff that we could do so that we were a little bit more diversified. And it doesn't have to be, you know, one asset at a time. We can actually make this thing trade multiple assets at the same time. So your probability of winning, I think, goes up quite a bit. I think there's a bug that we need to fix that's not buying right at the money, which I think would improve our returns. There's pulling out of common, like basically organize this a little bit better. This is more of a technical thing. And then trailing take profit. I think this would make a very big difference. We're right now taking a profit at, I think, 0.1% or something. I remember we did this with another algorithm before where we switched it from a hard take profit to like a trailing take profit. So you have those days, like if you have a day where the stock market shoots up like 10%, these call options could make an unbelievable amount of money. You know what I mean? So that I think would be pretty interesting to do, like a trailing take profit as opposed to just a regular take profit. I think we'll see probably a pretty significant difference in the results because of that. So those are a couple of things for the spreads martingale, and we have a bunch of other ones for the Condor martingale. Those are some to-do list items for both. Right? They both have pretty crazy things.
Thanks for that. Appreciate it.
Yeah, no problem. Let me go through a couple more questions here because there's a few questions that were asked. Deepesh asked the question, is there a start and end time to executing the strategy? I can imagine over a longer period of time, as losses increase, the incremental investment needed in the martingale strategy could be very high. Yeah, that is definitely a downside of the martingale. It does have high returns. It's not like it comes without its risks. Over this period that we back tested it, we had a pretty low drawdown of only 15%. That's a heck of a lot better than I think even the stock market itself did over that time period, which we have here actually. Yeah, the drawdown in the S&P was about 10%. Ours was 15%, so a little bit worse than the S&P, but significantly higher returns. So there's definitely risk in a martingale. It's not impossible to blow up one of these things. We have done that in the past, but the returns are actually quite crazy. My thought process on that, or at least what I plan on doing, is, you know, we have an algorithm that produces 400 or 1,000% a year, something like that. If I saw my account triple, quadruple, I'd take some money off the table and then, you know, withdraw, put it into something different, and then kind of diversify that way. That's what I would do personally to get around that kind of risk. But yes, it definitely comes with risk. You're not getting 400% a year or 1,000% a year without taking a risk. I'll tell you that much.
Also, that multi-asset thing that you mentioned, if we do it that way, that might kind of diversify it, and if one of them blow up, the other ones might make up for it, things like that. So I think My proposal is to really, I recommend everybody vote on this because we've done so much already on the iron condor, and this we just started, and there is so much that we can do, and there's so much possibility on this. So I would definitely vote for this one. I think this is just a brand new one, and there's so much more that can be done on this one, and it looks really nice so far. So.
Yeah, I
Yeah,
agree.
I'm excited about the spreads too.
Yeah.
Robert, just from your perspective, right? I mean, we've got the Condor Martingale deployed and running against real money. How do you think it's performing? I mean, do you think, I'm just looking for your perspective, do you think it's worth pursuing improvements there, or do you think it's worth like pivoting and looking at, you know, the option spread, for example? Like where's your head at? I'm just kind of curious.
I mean, my head's at like I'm always thinking like let's diversify, right? I have a bunch of money in the Condor Martingale. I have what is it, like $35,000 in that personally. So 35 grand, something like that. So I already have money in it. I plan to keep it there for a while. I have no plans of taking it out. But what I do like the idea of is to have a diverse set of different algorithms, right? Like, I mean, we can improve one till we're blue in the face, and you know, there's probably ways to improve it and get better. But I think we could get a lot of the same learnings that we got from this, bring it to the other algorithm, and I think we could get some pretty amazing results there. And especially because we haven't really had a chance to improve it that much yet, I think that there's a lot of room for improvement. That's what I think. And then
Thanks for that. That's awesome.
Yeah, no problem. There's a bunch of other similar ideas like this I was thinking of too. I was talking to some people that are doing Forex stuff that's kind of like this, doing like Martingale Forex stuff. They had some pretty impressive results. So there's I think there's a lot of different ways that we can do something like this. So I'm of the mind to diversify a little bit. That's what I'm thinking. I don't like having all my eggs in one basket ever. I got burned with that in the past. I don't like doing that. You know what I mean?
Yeah, it makes lots of sense. Totally.
Yeah.
Can I ask, what's the risk of getting a sign?
It happens. I've got assigned a bunch of times. We have code in there that just sells it. For spreads, it's not going to happen most likely. Because the one that we're selling is probably going to stay out of the money. But for the Condor, we get assigned all the time, and we have code that sells it when you get assigned.
Yeah, this you never for the debit you won't get assigned ever. It's because you already covered. It's like a covered call. You never get assigned, right? Because the one that you're buying is basically covering the one you're selling. So it's already it's already covers that the one that you're selling. You never get assigned.
Okay. Cool. Thank you.
Yeah, no problem. Well, let me see if there's some other questions here. Got a lot of people that joined us through Instagram. I don't think we can get comments on YouTube. And then you guys wrote some comments here in Zoom. There's a question here from LH. You know, is there an explanation of how options work? Honestly, I don't think you need to know that much about options to go through these. The Condor is more complicated. The spreads are like, it's just you're betting on the market going up. It's not that complicated. I don't think you need to know much about options to do this. But yeah, I agree with Worth. If you want to learn about options, you know, YouTube is probably the best way to go. They have some really good videos on there. YouTube in general. I don't know who that person is. Pandera Money. Pandrea Money. But yeah, I think YouTube in general, like if you just search for options, there's plenty of resources. Yeah, Tony Zhang from Options Play. Cool. And then Easton also asked me a question. Do you want to show what you've done to implement stock MA crossover and interactive brokers, or would you rather wait till a cloud version is ready? I mean, that's up to you, Easton. If you want to talk about it, we can talk about that algorithm too. Is that something that you'd want to work on today?
Yeah, just mainly to show it to people who are interested in interfacing with interactive brokers, not necessarily the program itself, the code itself.
Oh, okay.
But everything else is with Tradier and Alpaca, so
right.
this would be a first.
Okay. Yeah, no, I think it makes more sense to wait until the cloud version is done because this is going to change dramatically very soon. I almost have it working,
Sure.
by the way, in the cloud.
That makes sense.
Yeah. So I got it work on my computer today in like a cloud type version. Now I'm just trying to figure out how do I take that and put it actually into the cloud. So we're actually very close to having that finished.
Oh, cool. Okay. I'll be patient. No problem.
Cool. Awesome. Yeah, it's been a lot of work. I'm not gonna lie. The past week I've just been obsessively working on it, and interactive
Wow.
brokers just it's taken much longer. I thought I was gonna get it done in a day or two. It's been a week, and like long hours doing that too. So
You'd think the very first broker to implement APIs would make it easy, right?
oh yeah,
Weird.
I agree. I don't know why interactive brokers wants to make life so difficult, but I don't run the company, so what are you supposed to do, right?
All right.
Yeah.
Thanks.
Yeah, no problem. Okay, cool. So really there's just two things on the poll today. Anything else you guys are interested in? Okay. All right, so I'm going to send off this poll. You guys can vote on this. Launch, there we go. Okay, only two options today. And then while you guys vote on that, I'm gonna go get myself some water and I will be back shortly. Okay. Hey guys. Hey guys, welcome back. Just reading, someone wrote a comment here, Disclosure Capital, could you check the Gari network? I don't know what that means. If you could let me know what the heck the Gari network is, I can respond to that question. I'm not sure what you mean by that. Okay, and so a few of you guys still haven't voted. There's 5 people have not voted yet. So if you guys want to vote, speak now or hold your peace. But honestly, I don't think it matters anyways, because we have a pretty significant. Yeah, you guys are voting now even more. So yeah, this is over. There's no chance that the other algorithm will win. And makes sense to me. I agree with you guys. So ending, share with you guys the results here. Let me do this screenshot. These are the results. Those of you guys on Zoom. So most of you guys voted for doing the spreads, which to me makes a lot of sense. I'm thinking the same thing. We've worked on the Condor Martingale for quite some time. The spreads is a new algorithm. It allows us to diversify a little bit. We got some really good results by the first day. So I feel like there's probably a lot of room for improvement here. So that sounds really cool to me. Cool. All right. So let's get started on it. So there's a bunch of things that we could do to improve this spreads algorithm. Right. Here's, again, the results. Right. We can see how this is doing. We got some points where we got all the way to loss 3 that happened more recently in June 14th, 2024. There was 3 losses in a row, which gets us to, this is loss 1, 2, 3. This is the last one. If we had lost that one, then it would have been a pretty big drop. So I think our, where is that? It would have been somewhere around here. We actually didn't have that bad of a drawdown. I guess this is what's interesting about these spreads, is that the losses aren't actually that big on each one. I think even if we did have a bunch of losses in a row, it probably wouldn't be that severe, is what it seems like, at least.
Because that's, you just lose.
Yeah,
how much
because you're buying. It's because
Right.
you're buying them. So martingale doesn't make as much sense when you buy or sell the call and put, but when you buy the call or put, because you just pay the price of the option. When you sell is when you only get the premium, so you have to leverage to make profits. But when you buy, you don't.
Right.
So even if you lower the number of contracts and you make it flat, like, you won't make much. I mean, you will still make the money because you're making money here because you're correct on the direction you are taking most of the time, not on the martingale.
I mean, I don't know how often
actually-
it's correct. But...
Actually, go ahead, Rob. Sorry. Go ahead.
Yeah, sir. I was just saying, just a quick thing. I don't know how often it's correct. We could actually check this. We count the number of wins versus losses, but I mean, overall, the stock market's up like 70% of the time. So, like, you have probability on your side in that respect, you know.
Well, actually, when we started, we did it with all martingale and didn't do that well. So last week, and because and this is the martingale that causing it to actually work this well, because we are not doing anything directional as we talked about in the beginning. The only thing that helps it is the martingale is just actually super power charging.
Yeah.
And the intentionality, there is no. The only thing we're doing is VIX, basically, and it's just to avoid the days that are very volatile. So all you're seeing is because of martingale. Otherwise, it would be kind of random, pretty much.
Yeah, I think it was still up, but it was up a lot more with the martingale, if I remember correctly. Like, it made a pretty significant difference. Yeah.
Yeah, I mean, the thing that makes it impressive is market. It wasn't impressive at all without.
Yeah, that definitely made it do a lot better. Because even if you're losing, like, losses, you just double down and you'll eventually end up winning, right? Like, I mean, the question is, how many losses in a row are you going to have? But even when you're in the middle of a bear market, you don't usually have consecutive losses. right? Like you'll have usually like a day down or 2 days or 3 days, but like you don't usually have a ton of losses in a row, right? So in that sense, the martingale really helps you win there because you don't need to win them individually. You need to just win any one of those 4 or 5, and you've made your profit. You know, so the changes the probability of it.
And the advantage of these two, the iron condor is because the drawdown is a lot less. Because when you lose, you just lose the money that you put in. You don't lose a lot more. I mean that for iron condor, you lose really big each time you lose. Okay, especially if you don't do any stop loss and you just lose. It just breaks down to like you could lose like 6-fold, even 10-fold, whatever you pick in terms of your deltas and stuff. But in this case, all you lose is basically the money that you put in, which is limited. So that the whole thing is basically it looks a lot better so far. But I think if we run it for 10 years, we will see. We might run into some trouble because this 1 year and a half has been really, really good market.
Yeah,
So,
definitely.
So.
I agree. That actually is the first thing that I want to do, right? Is just get it to go back further in time. And to do that, we just need to use a different indicator, right? We use the regular VIX as opposed to the VIX 1 day, right? Or something along those lines. And I think we use the VIX 1 day with the Condor strategy, the Condor martingale. This is spreads martingale. With the Condor, and I think you're right because of that same reason. Like when you lose pretty big. So it's pretty important for you to try to predict those days. Whereas I don't think the correlation is nearly as high with winning on just a straight increase with the VIX. So I feel like we could be a little bit more loose about that, and we could look at the actual VIX as opposed to the VIX 1 day, and then we could actually go back further in our back testing. I think that to me that's one of the most important things right now, because you're right, it has been a very good market the past year and a half. How does this perform in 2022? How does this perform in 2020? Right? Like I'd really like to know that, right? Because that can have a pretty big difference. And if we could actually go back and figure that out, then if that ever happens in the future, which I'm sure it will, we'll be more prepared for it, right? So
Rob, did we ever run this with just regular weeks?
No, we have not yet.
Even for this small period? Because I would imagine we want to do that first and then run it for longer, and we compare apple with apple, right?
Yes, that's
so
exactly what I would do.
the regular weeks and then run it with regular weeks for longer time, and then we can compare.
Yeah, that's exactly what I would do. 100%. Awesome. Okay, cool. So that's the second part of my question is what do you guys want to work on in terms of this? I would recommend, again, working with the regular VIX first. Is there anything else you guys want to try out with this algorithm? Or is there any things that you want to try and see if we can improve it in some ways? Using the regular VIX, going back further in time, those are really good. Multiple assets, I think, is a good one. There's other indicators, like Algo, for example, you mentioned. Other indicators to predict direction, right? There's a bunch of other, just tons of them that we could use, including the one that you mentioned, but then there's, so many other ones that people use. Anything else that you guys would want to do with this?
We can try it for longer time periods other than just 1 day. We can try it for different time periods too, just
like holding
just
it
to
for
check,
longer.
like for maybe 2 weeks, maybe 1 week, to see if we get better results or more reliable. I mean, if you do long term, I end up getting a lot of breakdowns and it doesn't look as good as it looks like this. We can try for like 2 weeks or 3 weeks options that are longer time options basically, and see how that works.
So would it only win during the bull market and would lose during the bear market?
Well, I mean, there's more down days. Yeah. So this is a directional play. So yeah, I think that in a bear market, it's going to perform less well. I would say that's pretty likely because it's betting on up days, right?
So I would say during a bear market, we can have it to switch over to a put spreads.
Oh, exactly. Yeah, that's another thing. Actually, that's a very good idea. You reminded me of this too. Yeah, we can do exactly. I mean, if we do the high VIX days, we can do either a parallel script. It's another bot to do it, or we can combine it with this. Either way, it works better to do put when the VIX very high, just to test it. And all we have to do is take the same script and just reverse put and call and then go for high VIX and see how that works. And that we can do very quickly too, just to test it out.
Yeah, that makes sense.
And see what happens.
Okay.
And then that would be complementary, basically.
Yeah, so you could bet on the market going down as well as the market going up.
Exactly.
Yeah.
Right.
I'm a little skeptical of that personally, just because the market does not tend to go down nearly as often as it goes up. I think when you break down the amount of up days versus down days in S&P, it's something like 70-30, right? So so you have to be a lot more accurate with betting down. However, we could definitely try it. I think we'd probably have to find some way to make it better to predict, or maybe we buy it further out or something. I don't know, protecting against like big losses or something.
You could use EMA crossovers to kind of help give you a trend.
Yeah, we could do a bunch of things to give us like trend analysis, and the level of the VIX could do that too. There's a lot of things that kind of correlate whenever there's a bear market. Okay. All right. Any other ideas that you guys want to add to the list? Okay. I think it makes sense to start off with this regular VIX, so we can go back test further. We'll try out the actual VIX itself as opposed to the VIX one day. But if you guys have other things that you want to test out, let me know. Or if you want to make any of them priority, let me know. Okay, so let's start off with this. So we'll go, we want to add in the ability to actually do the regular VIX. So I'm going to start adding that here. We basically just pull this from our other strategy. Start working like a little tools file. Is Jack here today? Jack was actually working on a pretty cool thing that would make it easy for us to bring code between strategies. He was working on like a little class that we could use, because a lot of the stuff that we built in the Condor Martingale, we just bring over to here, right? We've already done a lot of this code. So I'm going to copy that over right now for the regular VIX. Okay, we have VIX percentile. We also have regular VIX. Where is that? Get VIX values, get VIX value. Okay. So there's our getting our VIX. Let me throw that in here. So it's getting our VIX, and then we also need to get some other stuff around the VIX. What are the other things here? We mentioned it's a lot. There's a lot of stuff we do with VIX, but we'll go our parameters. This is what they look like: max VIX and min VIX. I'm going to throw that in. Okay, there's our VIX values. With the other one, we were using a max VIX 1 day of 25, so we could try that out. See how that compares with the regular VIX. I think the regular VIX doesn't move as much, so maybe we'll need to set that number a little lower. That's what I suspect, but we can start with 25. And then let me take a look at how we did this here. Max VIX, we'll get that. And then when we use max VIX, we go like this, check max VIX, check min VIX. We'll throw these in. There they are. You get those functions, check max and check min. Check max, check min. There it is. Okay, there's max VIX, min VIX, and then get VIX value.
And look at the historical of the S&P 500. 54% of the time since 2010 goes up, 46% goes down. So there is a small edge there, just taking longs.
That's less than I thought. I thought it was actually a lot more than that. I thought it was like 70-30.
Probably in a period like last 5 years, because it's been. But if you take it like from 2010 July, it's just 54.
Okay, yeah, that makes sense because we went through a bear market, so that could have swayed it a little bit.
I wonder if you put like a put spread in there as well, just like with a really small win rate, 5% or something, if that could usually take, if you could usually hit target on that just due to market fluctuations and take some of the risk off for bear market.
I mean, if the probabilities are that close, I thought they were a lot further apart. If they're that close, it'd be interesting actually if we could do both. We could do like a put spread and a debit spread at the same time, right? So effectively, we're betting that the market moves at all, right? That'll probably bring down how much money we make on up days, but it will increase the probability, I think, right? So less chance of getting up that ladder of the martingale. I could add that to the market. So do both. Okay. Let's see if this worked here. We're changing the back testing. We're adding in paper 2 now. Let's hit run and let's see if this works. Okay. Well, it seems to be working. At least it's not crashing. That's a good start. Yeah, let me actually run this in debug mode. Just confirm that it's actually working. It's not crashing, but that doesn't necessarily mean that it's working. So just going to check up on that. And backtest seems to be taking a while too. I don't know why it's so long, 37 minutes. It should be a pretty straightforward algo. Go in here, check max VIX, and get the value of the VIX. There it is, 16, for example. Let me check, are we greater than that or not? VIX is 16, max VIX is 25. So then we go false. Okay, so far seems like this is working properly. VIX 1-day value. Here, not, I don't know what that means. Okay, so this is looking good. So we're running this back test. Let's see what happens with VIX as opposed to VIX 1-day. And I don't know why it's 36 minutes to back test, but okay. So we'll run that. I think it'd be good also to just run this concurrently with a longer time period as of right now, so we could just get that moving. I'll make one that's a longer time frame here. I think we can go back quite far, right? 0 DTE started in 2022. We can go from there. I personally like to go since 2020. So we see how it actually did around that time, even though it's not going to be 1 day. They're going to be like weekly expirations for that, or I guess 3 times a week. And it's July 16th today, so July 15th. All right, so I'm going to run this as well over a longer time period so that we have that moving. All right. Options, spreads, martingale. Okay, and that's going to take quite a while to backtest because that's to download a lot of data too. And backtest that far back in time, really. For some reason, I can't get data going back that far. That's strange. I pay them enough money, you'd think that they'd let me get data back that far. Maybe we'll have to start from 2021. Let's see if that works. Python, options, spreads. No, that's still too far back. That's strange. I thought I was paying him more money to be able to do that. At least if we can get 22, that'd be good.
If you're doing the advanced plan, you're supposed to be able to get 5 years.
Yeah, I don't understand why it's not getting it for me. I should have the ability to do this. I don't know why not. Let me take a look at my Polygon account really quick. Polygon.io. Maybe something got messed up with my account or something. Let's see. Yeah, I'm paying him $200 a month. So that should go back pretty damn far.
5 years.
Yeah. I'm also paying them $30 a month for stocks, which goes back 5 years as well. So I should have that. I don't know why I would do that. Let me just upgrade my Lumiwealth because we made some changes around this. Pip install, upgrade, Lumiwealth. Yeah, I got the latest. And then let me just double check. Maybe I'm using the wrong key. I'll put this on a different monitor for a quick second while I do that. Polygon. Oh, I don't think I'm using the right API key. That's why. Yep, that explains it. Okay, so let me try this again with the right API key this time. And that should hopefully fix it. We'll go back to 2020. Should be able to go back at least that far. Okay, now it seems to be working. Okay, so it's just the wrong API key. That's what it was. Okay, so we got that running. We'll kind of get these results in a little bit. All right. Can you guys give me one quick second as someone's at the door? I need to answer the door for a quick sec. But we basically got this one done. Let me know what you guys want to work on next. You know, what idea do you guys want to pursue next? And I'll be right back. All right. Hey, guys. Okay, so this thing's still back testing. I feel like another thing we could add to this list is just speeding up back testing. Is this taking a really long time? And I think one really easy way to speed it up is by looking at don't look through as many strikes. Right, because right now we're going through parsing through a bunch of different strikes. I think we can speed that up quite a bit by making a few little tweaks, so that way we can at least get our results faster. Okay, so what do you guys want to work on?
I was just gonna say I'm doing a back test on the spreads martingale right now, and it's like a 26-hour back test for 2 years.
Yeah, because if you
I don't
don't
know if that's normal.
are you paying for Polygon?
Yeah.
Okay. It will definitely take longer the first time around because that's to download all the data. 26 hours seems a little excessive. That's the kind of thing I would expect to see if you're not paying them, right? Because then they do the rate limiting thing and it slows it down quite a bit. But the first, like that's probably just the first time around because it's downloading about a bunch of data, right? Like when you ran it was probably downloading a bunch, right?
It did have to download everything first, yeah.
Yeah, that makes sense. Yeah.
Okay,
So
yeah.
So I think your first time around will take a while, and the second time will be much faster.
Sounds good.
Hey Rob, can we add we talked about it last week, I thought it was already on there, but can we add the multi-leg and also SPX to the list? So eventually when we want to do on the actual for the put money in it, the multi-leg I think is really going to help.
Yeah, multi-leg makes a lot of sense. And then SPX is another one that we could add in. Yeah, I'll add those two. Okay, multi-leg is a pretty simple thing to do. Like we can add that in very quickly. That's not a very time-consuming thing. Although when I've tried it, I tried trading multi-leg in like live trading, and it was giving me some issues. I don't know if you guys found the same.
Oh, Rob, I've been asking around actually about the issue. I think it might be related to multi-lag. You put it on. This is the error I got. Is this related to multi-lag?
Let me take a look here. So
yeah, because it mentioned multi-lag a couple of times in this error log.
Tag contains invalid characters. This might, that it sounds very possible that this is multi-leg. Yeah, because it mentions multi-leg here. Yeah, I think you're right. I think this has to do with multi-leg. Yes.
Got you. Okay.
Yeah, you have it says.
I just switch it off. That's it, right?
Yeah, yeah. If you switch it off, the problem is that if you switch it off, then sometimes it doesn't fill all of them, which is a bit like that can be a bit of a risky thing, right? Because if you're doing a condor and you only like fill 2 out of 4 or 3 out of 4, then you have a very different chance of making money. In some cases, just there's no like you're pretty much guaranteed to lose money in some situations. So multi-leg is pretty important. I want to start working on that again at some point. I'm first trying to get this interactive brokers thing to work, and then once I'm done that, multi-leg is on my to-do list.
Got you. And Rob, just from your end, like live trading, like your setting is also not having any like multi-lag. You just throw 4 orders pretty much at the same time, right?
Yeah. So if you take a look at this, like here's like live trading, for example. This one, you'd see that these are all my settings, and you see is multi-leg is false. And actually, I don't know if it screwed up here because it only bought one, but it didn't buy the other one. Right? Actually, I can log in. I don't know if that's a problem with the messaging or if that's a problem with the multi-leg. In either case,
it real money or the
real money,
paper trading?
This is real money.
Oh.
So, which is why I'm thinking about it a little bit more. Yeah, we have 1, 2, 3, and 1, 2, 3. Yeah, I think it missed one of them. These are expiring 17th. Oh no, actually it has all of them. So I think it's just a messaging problem. So I have 1, 2, 3, 4. So I got all of them. Okay. It didn't mess that up. Yeah, it looks like we won money on the last one, which is great. So that was a pretty big bet.
So it's better just these days we just, check every day and just make sure, all 4 went in. Okay?
I mean, I don't check it. We could put some code around that to double check that they all got filled. It's something we could do to, be have a little bit more redundancy. But doing the multi-leg, I think that's the right solution.
Okay.
Because there's more to it than just that. Like even if it didn't fill, it's like you want to fill all at the same time too, because the market can move on you. So
Right.
Yeah, I think doing the multi-leg makes more sense. I'm gonna focus on that at some point soon. Yeah.
Okay. Thanks, Rob.
Yeah, no problem. But yeah, we made some money on this, which is nice. Made a little bit of cash.
Definitely. Yeah. I've been doing like paper trading on this, was also pretty good result. So
Nice.
I just decided to switch to real money.
Awesome. Yeah, how is the paper trading for it doing? This martingale 5, this martingale 6, 8. This one's been doing pretty well. The 8, and then the 9. This one's down a little bit. Yeah, the market's been pretty volatile the past little bit, or at least there's been a lot of crazy events between. I think the political stuff is mostly driving a lot of volatility.
Yeah.
So, yeah, this one's up quite a bit. This one's nice. This is the martingale 8. Yeah. I actually had to reset mine. If I had kept it, it would have gone up a lot. I should have just left it. I ended up resetting it because I wasn't sure if something was wrong. So I'm down. If I had kept it, this would have shot up a lot. Oh well. Lost a little bit of money on that.
In the past couple of days, I did realize that, one of the paper trading account I did have a consecutive 3 days loss.
Yeah.
Yeah, but lucky that I was doing the martingale 6, so I have 4 tiers. Right? So I have 4 stay. So it just turn everything back on.
Yeah, in general, having more tiers is less risky, right? So
Right.
I mean, I wouldn't mind doing that with this one too, because it's like, well, what's the chance that you'll lose that many times in a row? I mean, it's not 0, right? Especially if we're going through a bear market, Well, I guess we'll see the result here soon, right? In 54 minutes, we'll see how it did over COVID and all that.
Sounds good.
Yeah, but mind you, though, usually when there's a bear market, I mean, VIX is pretty high, so it tends to sit you out, right? So in that sense, it does kind of protect you, Yeah, like this went over COVID already, and it didn't blow up, so that's a good sign, right? 22,000. The account started at 25, so it did lose money. Mind you, it was COVID, then the freaking world almost blew up. You know what I mean? So that's actually a pretty good sign that this algorithm didn't get killed during the COVID crash, but it probably sat out a lot of that year. That's my guess. We'll see what happens, but it probably didn't stick around during that time. Okay, all right. So what do you guys want to work on next? We have a bunch of stuff. You guys want to take a quick vote? What do you guys want to do? These are all pretty interesting. I vote for speeding up the back test. That's my vote. Just because if we
definitely
speed this up,
that sounds logical, because that helps us see the results quickly.
right? The way I look at it is if we speed up the back tests, then we'll also be able to get results faster, and everything else will go quicker too. So it's like shifting gears. Slow down a little bit to speed up, right? What else would you guys want to prioritize on this list? What do you guys want? Who wants to upvote any of these?
I'd like to do more than one asset at once, like all 3 major indices.
Okay, so that's already in second place, so we'll just keep it there. Cool.
Yeah, I'd like to second that also, please.
Okay. All right, so we'll really prioritize that then. Okay. Any other upvotes? Okay, so let's work on this speeding up the back test first, and then they'll make it easier to do the multiple, especially if we're doing multiple assets. This will really be a very big impact because multiple assets is linearly going to increase our time, right? So if it takes 30 minutes for one and we want to do 4, 30 minutes times 4, you know what I mean? It's a big difference, right? So
Yeah, the back testing is pretty important.
yeah, speed wise, right? So let's take a look at this. And I actually had an idea on how to do this before, but we were doing something along these lines here, right? It was like, how many deltas are we going through? So I think this is one quick way to do it. Buy asset, sell asset. Okay, so let me run this in debug mode, and then we'll see how that's working right now. Let me get rid of this while we're at it. It's not needed anymore. Okay, so let's say here. So we're looking to buy delta is 0.5, sell delta is 0.2. So the strikes that we're going after is what's the price of the underlying? Underlying price is 324, and we have strikes all the way from 305, which we really don't need to check because we're only looking for anything that's in the money, I believe, or out of the money, right? So in this case, we have a buy delta less than or equal to 0.5. Right, this is what's happening here. Do buy delta less than 0.5. I think that's all we really need to speed this up. Actually, I think this will like 2x our speed, that one little thing, because it removes 20 different strikes that we have to go through. Okay.
Rob, I have a question. I was looking at the martingale condor, that script. I was like, doing debug mode. I didn't realize the algorithm go through every single minute of the day. So let's say it start from 9:30, it will go through 9:30, 9:31, 9:32 until like 3:45. So I was thinking like, is there gonna be a time saving if we can just skip all those time, those minutes before 3:45, just jump into 3:45, create the order, go to the next day. Is that gonna save time?
I definitely will if we were to do that. But there's also keep in mind that there's sometimes things we want to do in the middle of the day, like we're talking about stop loss. There's what if you got assigned? There's like a bunch of things that could be happening throughout the day. So yes, it would make backtest run faster, but it would also remove some features that we had.
Understood. Okay, got you.
Yeah. Okay. For some reason, those if statements didn't get called. That's weird. Let me go through this again. Okay. So we go here. Buy delta is 0.5. Buy right is call. And sell delta is less than that. Okay, so we go here and we add. So strike starts off with 0. So this adds in all these strikes. This is all the ones that we actually want. I don't know why it goes all the way back to 304. I think maybe we have this backwards. So by delta, what is how would this work? Like if we had a
Literally 50 and 20, right? Close to 50, the closest to 50 and the closest to 20, right?
yeah. So let's say in this case, our underlying is 323. And we're looking for a 0.5 and a 0.2 delta. That would probably be like 324, 325, right? Wouldn't that be?
323. Yes, yeah. I mean the closest, whichever is closest to 0.5.
Well, which direction does it go though? Right? Is it going
I mean
upwards?
the one that's the one that's out of the money. Whichever
Which is
more
above 323.
You don't want to be too much in the money because you're paying too much money, basically. It's too expensive.
Right. So we want 323 and going up, right?
So you're gonna be lower.
We're gonna be less than 323.
Yeah, you're gonna go towards your lower price.
Why would we want to go less than the underlying? Isn't that in the money?
Less would be out.
Less would be out for call options. So if the underlying price is 323, then I mean I could just check this here, but
let's look at
in this case we're just getting both of them. It actually ends up picking, which one is it by? Which one does it pick? So it ends up, so the buy strike is 323 dead on, and the sell strike is 325. Yeah, exactly. So it's going up. It's not going down. Right. So this case, it still goes through this. Right. And this case, we only really want going up. So if buy delta is less than 0.5, I think these are actually flipped. We want to be subtracting if it's less, no, if it's less than 0.5. Because 0.5 is the middle, and then it goes all the way down to 0. And then it goes, how does this work again? It's kind of hard to picture this in my head. It goes from 0 to 1. So there is no negatives.
There is no negative. No.
Okay. So the middle is 0.5. Okay, so this code was written very poorly, incorrect. Yeah, I guess puts are negative. That's why we have negatives there.
Puts are all negative, calls are always positive.
Yeah, that makes sense.
But I mean, you never talk. I mean, you always say, even for puts, don't mention the minus. You know, it's understood that's there.
Right, but the actual number is a negative. Like that
the actual number is negative. Mathematically, it's negative.
Yes. Yeah. Okay, so in this case, if the delta is less than 0.5, let's say even less than or equal to 0.5, just we can capture that. We want to be adding, right? We want to go up. And then if it's less than 0.5, we want to go down. Or greater than 0.5, we want to go down. And then here, I think it's the opposite, because that was down, up. Yeah, because I think we go the opposite direction. This could be wrong, but let me restart this and we'll see if this fixes it. This should give us a really big speed boost. I would think that this gives us like a 5x speed boost or something. Like a pretty big difference. Okay, there we go. Buy delta, out of the money strikes. This is out of, this is, yeah, out of the money strikes. Yeah, exactly. So that's why it's going up. And this, we didn't add that. And then, perfect. And now we add this in. So now our strikes start at 324, right at the money. Perfect. Okay, so now let's run this and let's see if we got a speed boost. So I'm going to run the same time frame as this fixed 1 day thing that we're doing before. Let's see if this works. Then we should get a back test result quite quickly. Holy crap. Wow, that's a big difference. Look at that. 4 minutes. The other one's saying 30. It's been running for over 30 minutes now. It still has time to go. This new one will be finished before we even started the other one, before we finished the other one.
Woohoo!
So that is a 10x speed improvement, if not more.
It's awesome.
Awesome. Very cool. So now we can get results much quicker. So in that case, we could actually go and do this shorter or longer back test, right? Longer back test, and let's run this one too. And I'll stop this one. Because this one's actually going to be done even before that. So I'll stop that. And we'll do the longer back test. And this should get done quite quickly. There you go. Saying like 18 minutes, 15 minutes, 14. Perfect. Much better. Get results much faster. Okay. So we'll run those. We'll get those results soon. So next one you guys want to work on is multiple assets at a time. So let's think about how we need to do this.
If you do a loop, perhaps you want to just put it in a loop and do one, and then you give that list of assets, right?
Yeah.
So that you be flexible. You can do instead of just putting one at a time.
What do you mean by that?
I'm saying like if you just buying in a loop, when you buy instead of buy, you put it in a loop. That function that you buy, you put in a loop, that function, and then give a list, create a list of the assets that you want to buy and then buy one at a time.
Yeah.
And then you have flexibility to change that list. You put it even in the parameters.
Yep.
And that way you can change it.
Yep. That's definitely the way that we should be doing it, 100%. Okay, so I added that in here. This one is only going to have one. We make it paper 3 have multiple. But that's not the complicated part. That, like, of course, we should be making a list and doing in parameters. But what I'm thinking is, how does this actually function? Because I guess we have, like, it can get really complicated if you're looking at like the Greeks per symbol and all that kind of stuff. Because like the VIX applies to everything. It doesn't matter, like whether you're trading QQQ or IWM or whatever, the VIX is the VIX, right? But there's like stuff that's per symbol that kind of complicates things. So I have to put something in here.
I saw on that list there was a VIX as an asset. You can trade VIX.
What do you mean VIX is an asset?
VIX was on the list as an asset.
It was? Where?
I think it was.
Yeah, you can trade VIX.
You can trade options on VIX, but you can trade VIX.
Yeah, I mean, I don't see.
You can trade VIX futures.
Yeah, but not VIX.
Either way, I don't know. I don't see that anywhere. I don't know where you saw that.
No, I mean on the list of the to-do list that you had, there was a list of assets.
Oh, yeah, that's just ChatGPT just made that. I mean, yeah, it's
Yeah,
not
yeah,
even actually.
the mix you can, yeah,
Sure,
mix
we
you
can
can.
delete that. Yeah,
The rest,
it's not actual code though. It's not like, you know. Yeah. Okay. So let's see here. First of all, actually, we got a result here 447.1. That looks actually the same as what we got. Max VIX 25. I don't know why I opened up on this window. Actually, I know why. Oh, it actually did better just using regular VIX. This is the VIX one day.
Yeah. All right, cool.
437 versus 447. The drawdown is almost exactly the same. 1569 versus 1552. So slightly better results using VIX. Okay, cool. I'm game. It sounds good to me. Okay, so now that we have that, now we can actually go back further, which is already in progress. Right, this one's at 20,000 right now. This one's at 21,000. 30. Yeah, it's going so much faster with this new backtest. So I'm just going to stop the other one, because that one's going to take forever. Even with downloading, it's much faster. Okay, so if we're doing multiple assets, this is where we're getting the actual asset. I think the loop should probably be somewhere around here. Get rounded prices, underlying price, expiry, seek start, last price. Create a spread.
So if I update Lumibot, will I get that faster back test, or is it part of the spreads code?
It's part of the spreads code.
Oh, okay.
Yeah, it was just inefficiently getting the strike prices. Like it was, what it was doing is instead of just checking for, like, let's say if the strike price is 300, it only needed to go up. It needed to go 301, 302, 304 to check for that delta. But instead it was starting from 280, right? It'll go 280 and then it's checking. It's like none of those would actually work. So you're going through an extra 20 different strike prices for no reason, right? So that's what I changed.
So we eliminated some unnecessary steps there.
Exactly. Yeah, quite a few of them.
Great.
Okay. So here, yeah, the complicated part with adding in multiple assets is that we need to figure out what is just for one of them and what is for others. I think we could start the loop around here. Expiry seek start. Algo. Yeah, underlying price. We cannot get the price of the underlying.
Rob, any value of making a commit before you start this loop logic?
We could. I mean, I already made a bunch of changes, so we're kind of already mid that, right?
Yeah, I was just thinking, like, you just got everything running. You're still at your 400%. Like, do you want to? It's up to you. Just throwing it out there. Like, if you want to.
Sure, I'll do a quick save right now. It's not really functional in the state that it's in right now, but you know we'll save it.
Okay.
Save before multi-asset. I'll call that the commit. Okay, so we have this. So now we have this thing that's adding in a line. This needs to now be a loop as well. So we're gonna have to do a loop here. And then I'm seeing what else mentions underlying. This VIX stuff can go higher. I don't know if that's going to break anything if we go higher. Already bought with expiry. Find next valid option. We don't need to do any of that stuff. I guess I'll even speed it up. And then num losses, like when we calculate the losses, like I guess now we're doing all of them combined. So there's a diversification benefit to that. And then we also have the selling, the take profit selling, which will have to do this logic as well. Check stop loss. Yeah, right here. Stop loss, or I guess take profit. I guess both. There's last buy asset. Yeah, this is actually a pretty complicated thing to do. Okay, so this is saving, buy assets, sell assets. So we have to, there's going to be some pretty significant changes here. So let's start going through them. So first of all, underlying assets, right? Assets. Now we'll go loop through all the underlying assets.
How are we gonna do the martingale? So each asset that loses money, we martingale separately, or?
I mean, we could do that, or we could do a martingale of the whole thing, right? So if you know the combination of all of them loses, right? Like we could do it either way. What do you think?
We could do both and make a variable for it.
Well, let's pick one for now because it's complicated enough to just do one of them. I think it's a lot less, a lot simpler to do a martingale of all of it, right? So you invest in 5 assets. If your count went down today, then all of them increases, right? Your amounts for all of them goes up, right? That's the easiest way to do it.
Okay. Yeah. Let's start with
Sounds fine. Yeah.
Okay, so here we have underlying asset. Loop through all that. And then check take profit. We're gonna have to get to that. Stop loss and take profit. We'll go to do make these work with multiple assets.
A better solution maybe, I mean, we can of course finish that, but a better solution maybe to just have a bunch of different bots and run them, you run them at the same time. I mean, eventually, if you want to do something like that, and then just look at the combination of the results. And that way you can manage them separately, see which one are necessary, which one are not necessary, and so on. But right now we can do this to see what happens. But in general, I think that would be a lot more analyzable and more, you can do a lot more work on that way. But this is good to do to see what happens.
Well, I mean, there's implications to each one of them. Like if you want to do it right now, we could do it very easily right now for both. Like, I mean, or if you want to do this for multiple different assets, we could literally just change the symbol, run it many times. So that's a really simple thing to do. Doing this with like multiple assets at a time is different because it adds a different type of diversification benefit because it's all the same pool of money, right? Whereas if you're running them independently, they have different pools of money, and you'd have to have some sort of thing that coordinates that or moves money around if needed, right?
No. What I meant was, I meant just to have like eventually the best solution is to have like 5 bots
Right.
separately,
Mhm.
and each bot would be running a separate asset. And then you would analyze each bot, and that way you can see which one makes sense, which one doesn't make sense, and you can work on that separately. Eventually, that would be the best solution.
Right.
To be able to. But right now, for the purpose of this exercise, I think this is interesting to do anyway.
Yeah. Well, I mean, if you want to run multiple bots, you could currently do that, right? Like, I mean, that's
Yes, just put sense asset. Yeah.
Right. Yeah.
Yeah, that's what I meant. Yeah.
Yeah. Okay. So here we have underlying asset goes through next valid. Okay. That should work. Yes. Expiration, num losses, calculate number of losses. Okay. And then puts through the spread. Now, the next thing that we need to work on is this stop loss and take profit. Quantities to trade, that's okay. Do not have a zero in them. Get last trade total return. Portfolio value of purchase, okay. I'm just kind of going through the code here to make sure we're not missing anything. Underlying asset, rounded price. Get the actual expiry. Last purchase expiry. Already bought with its expiry. This is, we have to change that. Or we could just remove this code for now. Last purchase expiry. As we can go like this, we can go dot get underlying asset dot symbol. Call them last purchase expiries. There it is. Equals empty. And this could probably stay the same. Last purchases. Everything needs to become now multiple. Let's see how this turned out. I think I don't think it did as well long term. Yeah, look at that. It didn't do very well here, and then it just took off like crazy in 2023. Here, I think it actually blew up. So that's a different thing. So definitely in bear markets, it's not as good, but we can improve that, right? So we could spend some time trying to improve this here.
What was that? 23. January was one time probably.
Yeah, there's another something happened on here. I forget what it was.
Beginning, yeah, it was pretty bad.
Yeah.
2 weeks.
You can see the market was heading down here.
Yeah, and then 21. Yeah.
If we lower our maximum VIX value, then that I bet you it probably takes care of a lot of that.
What is it now? Right now?
What is it now? Like I think we're at like a 9 VIX or 10 VIX right now, like as of today.
That's really low.
Yeah, the VIX last time I checked was pretty damn low. Let's see here. This is a VIX 2018 right? And that's where this happened. This loss, VIX of 20. Yeah, I think if we just made the VIX cutoff 20 or even a little less than 20, we would have not had this loss, this big drop.
Oh, it's 20.
Yeah, when this happened, this crash happened, the VIX was 20, then it was 20.3, then 18, 20.17, 20.02. That's when we had a lot of losses. It was around 20, 18, 20. That was these big blow ups.
So what is right now our criteria?
It was over 25.
Oh, okay, yeah, that's too high. Yeah,
Yeah.
that's probably too high.
Yeah, here's another big loss, and the VIX was 20s around here, 19,
Oh,
20.
okay. Yeah, that's high. Yeah, for the debit, you want to, you probably, if you do like
24, 28.
15, you probably won't see. Yeah, that's too high. No, I
Yeah.
thought you had it like before, you had like 12 or something.
That was for the VIX one day. I said a lot higher for the other one.
Okay. All right, cool. Oh, okay then. Yeah, be good then.
Yeah, so we could set that lower. We could set to 20 or maybe 18 or 19. Is what it seems like would work well.
Try a couple of different, yeah.
Okay, but we do need to finish off this multiple asset thing first. So let me finish that first, and then we can try a different VIX value.
No problem.
I'll add that to a list. I'll put it high up in the priority too, because it's quite simple, and I think it'll add a lot of value. Let's go, what's it called? Lower VIX or max VIX. Yeah, so if we lower that, then also the returns will come down a little bit in the more recent times, because it would just trade less often. But I think in the long run, we'll have a much better result. Yeah, because, if we get a time like this happening again, like, I don't want my money in that. I don't want a 75% max loss. That is way too high for me personally. I don't know if you guys agree with that or not, but for me, I wouldn't want to take that kind of risk. But
Totally agree.
Yeah, but this is pretty crazy. This is an insane run up. Look at this. No wonder we got a 400% return. Look at how fast that went up.
Yeah, I mean, yeah, that for weeks over 20, people don't trade. So for sure. So that's definitely something.
Yeah, I'd go even a little lower than that, like 18 or 19 even, I think. But we could test it. Okay, so we're working on this. So expiries, last buy prices, last sell prices, last buy assets, last sell assets. These have to be like that. Stop for today. Last historical VIX one day update that we don't need to change. Last trade total return. Okay, portfolio value at purchase. Okay, I think those are all good. These will have to update to be to organize this a little differently. The date's a little higher up here, and these will loop through. Okay, self-assigned, so that's good. And this is take profit percentage, last buy price, last sell price. And if you go into check take profit, no, it doesn't matter what it is. We're just passing in whatever asset. Okay. It's also checking for none, right? Take profit. It's not none. Last sell price is not none. Yeah. Okay. So last buy prices. This is for underlying asset dot symbol. Okay. These have to be updated. Okay, those are good. Okay, I think that's everything. I think that should work. Let's run this. Let's test it out. Parameters underlying asset. Yeah, so I have to change this. Okay. All right, let's rerun this and see if that fixes it. I think we have a lot of stuff already that can work with SPX. So actually, it doesn't seem like that'd be a very hard thing to do. Okay, there we go. So this is working. Okay, and that seemed to crash or something. Why? List object as no attribute get. So actually, I don't think these should be dictionaries, not lists. If we run this, there's quite a few changes for this. Buy price, sell price, okay, check, take profit. Okay, another issue here. Last purchase dot date. This should be here. Okay. That should work. Let's redo this. It was actually going smoother than I expected. Pretty damn big change. And this says no duplicate last purchases. And we run this. Okay, so far so good. What we can do is we can match this up with the backtest that we just got. See if they're the same. If they're the same, then we could say that nothing really changed, and this is functioning properly. Okay, there we go. It seems to be working. Cool. Okay, let's run over this backtesting time period. Okay. Let's see if we get the same result. We'll find out in 2 minutes. Then we should try this with this lower VIX. I'd say like 18 or 19. That's how it seems like. 18 seems like a little conservative, but we could actually do that analysis. Maybe that's another thing we can do is run an analysis of which VIX values is best to trade at. Like we could actually just calculate that because we did that last time with the condors. So we can do that again with this. Let me run this here with 18. We'll see what happens. Yeah, these numbers look pretty crazy. I think this is probably the same. It seems like we have the same result. Oh, and if we're going to go back further, we probably want to change the time period because the time period that was bad was the longer one. Yeah, there you go. Cool, perfect. It seems like it worked. I'm looking at the back test right now on another one of my monitors, and it looks like that was good. There's 240 or 447, and I got here also 447. So cool. So those changes worked. So let's run this at a lower VIX, right? So I'm running this now at 18 VIX over a longer time period, right? And then we could also do multiple assets, right? So what do you guys want to do? SPY, Qs, I think those are kind of the typical, right? We can try that out. Let's see how that works. That's still a good result, 106,000. Even though we were a lot tighter about the VIX, that's still quite a large amount of money. So maybe 18 is like actually great. It is. Well, actually, no, it's 226 as opposed to 446. And there's a bigger drawdown for some reason. That's odd. A max fix of 18 actually made the drawdown bigger somehow. Yeah, 25, 447, 15, 18, 226. I mean, it's still a pretty damn good result, 226 or 266. 26% drawdown. It's a little scary, but not crazy. Let's see how it does over a longer time period. It's running so far. Nothing blew up. That's good. And this is the dual asset. It looks like it's going to backtest for a long time period. Okay. While this is running, I'm just going to use the bathroom real quick. I'll be right back. All right. Let me know what you guys think, where you want to go next. Hey guys, it's good timing. This thing's pretty much finished up. That's a pretty nice return. 173,000. 176.
What was the start?
We'll find out in a second. I have a feeling it's not as good as this 447, but I think it's a longer time period. So all we got to do is beat this 28%. I think it beat that by quite a large amount. It starts off at 25,000. Yeah, look at that. It had like big periods of time where it just didn't trade. Didn't trade there, didn't trade there. I mean, that's still pretty damn good. 53% a year. I wouldn't be totally against that personally.
This is 18?
We
Weeks
do
18?
18, yeah. So we can try increasing it a bit. We can try 19, we can try 20. Why don't we try 20? Because that's kind of like the typical that people use, right? Let's go 20. And then just SPY. We can run that. See what happens. Okay. So with 20. And I guess for good measure, I'll run it with 19 as well. So we have.
So this is where that put thing comes in, right? To try that to see high weeks.
Yeah.
What happens when you put the puts? Maybe the puts gonna help there.
Yeah. Right? I mean,
so all these periods that you have, we can put like 22 on high end, give it a little bit slack, and see maybe the puts kick in and actually give you more help right there. Who knows?
Yeah, because it didn't trade for quite a long time period here. Basically, all of 2020, it didn't trade.
Yes.
Then 2022, it didn't trade. Right. So basically, so it missed all the bear markets, which is good.
Yeah,
but
that's fine. I mean, you have other things to do. You don't. I mean, this is not the only thing you're gonna be running, right? This is just one of your. Yeah, you're diversified. This is gonna be one of the things we're gonna be running. So in the meantime, this is not going to cause any problem or not a big drawdown, and then you concentrate on other things that make you money, and so that's fine. But I mean, if we try to put in during this time, all you have to do is just switch right now to see if it makes any money. You switch call and put and change the weeks, and if it makes any money, then we can combine.
Yeah, that makes sense to me. Yeah.
Because that's fast to do it that way first.
Yeah. I was checking here. I think this one's supposed to do Qs, but I'm not seeing it download any data for. Oh, there's Qs downloading there. But it's not downloading. It's not the correct. There's something wrong with this multi-asset thing. It's not doing it properly. I'm gonna have to take a look at that.
Rob, could you run one test in where you increase the initial quantity to maybe 70 instead of 5 and just make it fixed? Or maybe 60, but make it fixed.
Sure, we can do that. 60, like 60?
Yeah, 60.
Okay. 60. Just SPY. And what level of VIX are you thinking?
It doesn't matter.
I mean, that'll make a big difference. You know, we could do 18.
No. I just the same one the level of VIX that you run previously.
Yeah. So this is 18.
Yeah, you could run that one.
Yeah. Okay. So let's do 18. Okay. Okay, so that's the fixed. Yeah, because you want to see, if the martingale helps or not. I'm assuming, right?
Yeah, exactly.
Yeah, we did this the first time around. It's worth doing again, I think, but I think you'll see that the martingale really is a good idea. But what I did with the other ones, I think could be a good idea, is if we go like 5-5 or something like that, 5-5-15, it just increases the number of these losses, right? Like I did this with the martingale 9, I think, on the condors, and I got a pretty damn good result with this. 8 or 9, I did it like this. That's what I'm running with real money. It's like tries, and then it starts to double up afterwards. So it does get a little scary when you get this whole doubling thing, right? Like
I mean, if you want to put like a lot of money, you don't want to go with very large number of contracts.
Yeah. So here I'm going to do 20 and 5-5-15. I think that's another kind of in the same direction of what you're thinking, right? So we can run that too. So Python options, spreads, and then main. Yeah, so we can have a higher level of VIX when we're doing something like this, because you have more levels, right? And then we'll see how that works out. Okay, but there is a bug here right now where it's not trading the Qs for some reason. So let me find out why. So this in debug mode. We'll go here to quantity. Then we'll go underlying asset. Let's see how this works. Something off about this. It's not buying that second asset. Okay, so underlying asset, SPY. Underlying assets has Q and SPY. Okay, so this is SPY. Okay, went through that, and then SPY again for some reason. Why? Last purchases .get. Why is it not continuing? Underlying asset SPY. Get next valid. Okay. Didn't get the asset. Okay, this doesn't have to be that. This could go continue. That's one issue. This also continue. Set return. Yeah, what I'd really like to do, to your point about diversification, Ali, what I would love to do is I'd love to actually have maybe like 4, 5, 6 different like martingale type algorithms like this that are like balls to the wall, like you make 500% a year or die trying kind of thing, and just run 5 different ones that are uncorrelated with each other, right? And they're going to blow up every once in a while, right? But some of them are going to like quadruple, 5x or whatever, and then move the money around. Like that's the way that I would actually like to play this.
Yeah, and that is the same principle as high yield ETF work. You have like a lot of like bond ETFs many of them go bankrupt.
Yep.
But since you have like 200 bonds, some of them, yeah, the money goes to zero, but it's just a small percentage of the
exactly, right?
portfolio.
So if we have like 5 or 10 different martingale type things, they'll blow up, some of them blow up, but
Or
some of them
100.
5x, yeah. Well, 100 would be hard to build, right? Like we have to actually build all these things, but we could
No, but
build
if
quite a few
you
of them,
just play the martingale, nothing else.
yeah. Yeah, I mean, well, we can, I guess with this format where we have these like spreads and things, like we could actually play a bunch of different things pretty easily. Like what I was thinking with different martingales is like we could do it on futures, we could do it on Forex, right? There's a bunch of different things.
Forex is very popular martingale.
Forex, yeah.
Yeah.
Yeah, actually,
lots of the robots in Forex that are profitable, they are martingale robots.
Yeah, that makes sense. I've been noticing that. That's actually one of the reasons why I wanted to start martingaling a bunch of stuff, because I've been talking to a bunch of different Forex companies because I'm just curious to see what else is out there, like competitors to us, and seeing all these different things. Like they're all using martingale, like pretty much all of them, right? And it's like you guys are making 200-300% a year. Like why not? Like why don't we do that? And with Forex, you could actually do martingale a little easier because you have more control over your leverage, right? So you could put not 5 levels, you could probably put like 10 or 15 or 20 levels,
And also you have many different currency pairs.
Exactly.
You
right?
can
So you
28
diversify
easily.
Yeah. So you diversify better. So yeah, I agree. I'd really like to try this with Forex.
So this is the video.
Yeah, this did not work out well. This is 19. I don't know why it did so badly. That's kind of crazy.
Oh, so this is just difference between 18 and 19?
Yeah, it seems like it. That's a pretty big difference, no?
Why?
19, 18. Big difference. Look at that. This is 19. This is 18. That is a huge difference in returns.
Nothing else different?
As far as I can tell, I don't think anything else. You could see the parameters here too, right? Days expiry. No, we didn't change any of that stuff. The delta is the same. We haven't tried messing with the deltas. I think that'd be interesting to mess with. Are these the right options? I don't know, right? My guess is we could actually put these a little closer, right? Because if we're taking a profit of 15%, then
you could, yeah.
I don't think they need to be so far apart. Yeah.
I mean, 0.5 is pretty standard, but 0.2 is people do different things.
Yeah, that makes sense.
0.5 can, I mean, if you go more in the money, you just pay more. But if you can go more out of the money with the 0.5 too, I mean, there is no, but usually you gotta, you want to stay close to 0.5 on the buy side, but on the other one, it's more flexible. You can change that. Yeah, people have different opinions. But 0.2 is kind of standard, but can change.
It'd be interesting to try it because the thing is, if we're capping our profit at 15%, then I have a feeling putting these closer will actually make it so that we spend less money to buy it.
Cheaper, yeah.
Right. That's what I think. Anyways, we can test that theory out. Okay, here's another one coming in.
Yeah, because main thing for 0.5 is the gamma thing that's important. The other one,
right. This is with no martingales. Drawdown 95%. That's pretty scary. Even with the 18 VIX. Even 18 VIX, we had this bad of a drawdown. So this is why we want to do the martingale, right? Because this is nasty. Like I wouldn't want to put my money into this.
Yeah, this we already tried it.
Yeah. So Alvaro, there's your answer.
Yeah, that's good. Good to know.
Yeah. Martingale adds a lot of value. Like it is scary because it can blow up on you, but I mean this thing blows up anyways, right? So like at least if you're gonna martingale, like you have a higher chance of winning, right? Right? If it's gonna blow up without it, it's gonna blow up with it, but it blows up less often with it, I know what I would choose. Okay, but let's figure out what is wrong with these assets. So this is now Qs. Okay, good. So now it's going to Qs. All right. And now it's actually going to get that spread, and it's getting Qs. Okay, now I think we got this working. Okay, so why don't we get our best configuration, which I think was 18. And 5.5 didn't work very well. Where's the 5.5? Swear we had it. There it is. No. 5.15, 5.15, 5.15, 15, 15. Where the heck is 5.5? Is this 5.5? Oh, there it is. Okay. 5.5 and then Martingale with a 20. That's not very good.
The drawdown is too much.
Yeah, way too high of a drawdown.
I mean, you give up in the first couple of years of that.
Yeah. Yeah, this would have been brutal going through that. Okay, so 5.15 and then 18. I think this is our best configuration right now. And we'll do it with 2 assets instead of 1. Let's run that. Okay, let's see this 2 asset thing go. And I'm going to clean this up a little bit here.
Also, at some point, I think that straddle thing, just buy, put, and call at the same time, that would be a straddle. And that may actually work out too, because, you know, if the market moves, you know, you don't spend a whole lot, but basically you're betting that the market's gonna move in either direction that day. So even if the VIX is really high, you still make money. Actually, the higher the VIX is better in that case.
Right.
Because in either direction you make money. So you want to go with high VIX in that case.
Right. What I was thinking about doing.
So we can take a look at that one too at some point.
Yeah, what I was thinking about doing is we could do when VIX is high, you go both directions. When VIX is low, you go one direction. That's kind of what I was thinking.
Yeah. But the problem with that would be when the VIX is high, your cost is they're gonna cost very high too. So you're gonna have to pay really a lot for them. So it's gonna correspond to the VIX, how much you pay for them.
Yeah.
Because the Vega is gonna be really high, so you pay. So usually these straddles don't work out because the cost of them are gonna be a lot higher than how much they're gonna move. But we should just try. We should just try to see what happens.
Yeah, I agree with you. Okay, so I guess that brings me back to here. So we've tried these already. We sped up the back test. We have multiple assets going, lower max VIX. What do you guys want to do next? We have a couple of things here. I have a feeling we might have a bug here that's not buying at 0.5 delta. I think it's actually buying 1 strike over from 0.5 delta. When I was looking at it, I had a feeling that was happening. Another one is pull out of the commonly used functions. That's just technical. Trailing take profit. I think that can make a pretty big difference. Because right now we take profit at a hard 15%. But what about those days when the market really shoots up a lot, right? Like when you have like the 2% days or 1.5%, whatever, right? Like if you have a trailing stop instead of a regular stop, I think we can like have these huge outsized gains, right? Because it's like, it's not even just about winning or losing. It's also about like, how big are your wins, right? And I think this can result in much larger wins. I have a feeling.
Trailing stop, yeah, that would. But I mean, your gain is limited, right? To the size of the spread.
Right. Yeah. You're still
So you can't go
yeah.
beyond how big your spread is.
Right.
So
Yes.
if you make the spread smaller, then your gain automatically gets smaller. So it's either, so you can try. You want to try the smaller spread first, or
Yeah, maybe that's a better idea. So why don't we go instead of 0.2, maybe 0.3. Let's do 0.3 and then a 0.4. All right, let's see what happens there. It was 0.2 originally. Okay. What the heck is going on here? Cost of spread.
also we are buying at what time again? Buying close to closing time, right?
Yes. Yeah.
So I think that's also volatile. They're more expensive. We may be paying too much. So if we buy a little earlier, a couple of hours earlier, that might help too in terms of how much you're paying for these things.
Okay.
You might save money. So that may be money saving too, if you want to try that.
When would you want to buy?
Around noon Eastern time, maybe noon, maybe 1.
So say 11:45.
Yeah, something like that.
12:45. Okay. Yeah, because we're only using 1545 because of the condors. But this is a very different thing, right? Like that, I've no confidence in that number at all. You know what I mean?
That's a different story. Yes, that's a different. Yeah, actually, that the reason you wait, that's because volatile, so they are more expensive. You're selling them, so you get more money for the condor, right? But in this case, you're buying, you want it cheaper, so it's different.
Right, it's the opposite. Yeah, exactly. Yeah, that makes a lot of sense. It might even make sense to buy 0 DTEs the morning of. So right now we're doing a 1 DTE, holding it to the next day.
Yeah, that's even cheaper if you buy it the same day.
Right.
Yeah.
Yeah, that's true. That's true.
So why don't we try that? We'll try like 11:45 the same day, maybe even like 10:45 the same day. Right? We buy it close to the beginning of the market.
But if you don't give it enough time, also this way you give it enough time to make profit. If you limit the time, you're not giving it enough time to, so that might limit the time that it would fluctuate to. So that might hurt it too.
Yeah, that's why I said at 10:45 as opposed to 11:45. That's why I did that, right?
Okay, yeah. If it's the same day, you want to close it by next day or the same day?
Same day.
10:40. Same day?
Yeah, same day, because 0 DTEs, right? It implies same day.
10:40. Okay, yeah, let's try it. Let's try it out.
Okay, let's see how this goes. So that's that. 9:45.
Sorry, and if it's in the same day, why you are not buying at 9:30?
That's a good question. I mean, I've heard that buying right at market open can be quite volatile.
Yes,
but maybe we should. I don't know. I don't have a hard answer to that. We could try 9:30 if you want.
No, I was just asking.
It will be again more volatile. I think 45 is better. I would go with 45 because right at the open of the market is really volatile. But you want to go 40.
But that's what you want, right? Because you are taking a directional position. You are not profiting from premium, but actually from market moves. Yeah, so you want it to be volatile.
That's actually fair.
You want it to be less volatile, right? You want your vega to be very low.
So you actually want a directional move, and if you don't have volatility, the market will stay flat. So after noon, after 12 p.m., the market doesn't move much. You want to capture the move that happens between the market opens and the close.
Right,
If you,
but when the volatility is high, then the price that you pay for it is gonna be also high, very high.
right, but if you are positive, it doesn't matter because that price
but you're
it's part
not
of your
know. How are you positive in this case? We have no clue, right?
You are positive because you are taking it.
You have no idea what's gonna happen. We just buy, right?
Okay, if you buy an expensive, that's your stop loss, right? Because that's what you pay. That's your maximum loss.
We can try. Yeah, I mean, why not try it? Yeah, you may be right.
We're just trying it, you know. Like,
Yeah,
that's gonna say.
Yeah.
We can go back and forth. Like,
Your argument is correct when you're selling, because when you sell,
actually is the opposite. But we can try what you're saying, see what happens. Just like the martingale that you said, we try this one too. We'll see.
Yeah, just try it.
We'll try. No problem.
We can argue back and forth because I see what you guys are saying. Like on the one hand, you're paying more money for the option because Vegas high, but on the other hand, you actually want the real volatility to happen, right? So it's like I don't know what the trade-off is, right? Like I think the best way to find out is just test it. You know, we just run both scenarios, which I'm already running. So we'll see what happens. Okay. What else do you want to try? What else do you guys want to try? Trailing take profit. That's one that I'm thinking about. What else do you guys want to upvote? Multi-leg we do pretty easily.
That putting would be interesting to try. All you have to do is switch put and call and go with high weeks and see what we get. For the one that the one that we got good results for it.
And also some type of directions. If during the first 15 minutes of the opening the market goes up, then you take a long position. If during the first 15 minutes the market opens down, then you go the opposite. And see, maybe there is some sort of indicator outside VIX on the direction for that day based on the opening, what's happening on the opening, or between 9:30 and 10. Whatever direction takes during the first half an hour, then you put the trade until.
That makes a lot of sense to me. You know, it's like basically trend spotting, right? What are we trending? Which direction? That makes sense.
I think if you are buying, then you're taking a directional position. So you need to have some VIX is volatilities. It's not necessarily direction.
There is some correlation. I mean, you see on the graph, right, that the VIX is high when there's a bear market happening, right?
Yeah, that's true.
Right. So there is something to it. It's not entirely like that. I agree with you, but there's some correlation, right? This is wild. The very end of it is just crazy how much it went up. Look at that. It's very interesting looking at this graph long term.
And that's the point. This is without martingale, right? So the martingale didn't do that. It's just the fact that 70% of the time during that period, the market goes up.
Right. Yeah, it's just because it's a bull market, right? So it's more likely to happen. Yeah. Yep, I agree. Okay. So we got an upvote on the put spreads. I think that'll be very interesting to run 2 different spreads at a time. Anything else you guys want to upvote? Okay, so let's try doing these puts.
Maybe this is an idea that we could try the other one you built like a couple of weeks ago, and we can check the the value of that trade at 9:30, and then we could use this as a hedge for that one in case. So you can have both martingales working in parallel. So if you, because the other one you put on the previous day at 3:45, right?
Right.
So by the opening you see things are not looking good, you can just use this one, the martingale, just to offset that risk. Since you already have the backtest for the martingale for the other strategy, you know it's gonna work on the long term, but then you can use this one just to avoid the other strategy going too high on the martingale, to basically offset some of the drawdown risk.
Yeah, so combine the two.
Yeah.
Yeah. We have to talk about what deltas and how all that works, because in some ways they negate each other. It's almost like if you're buying and selling the same option, then you might as well just not buy in the first place. So, well, yeah, there's details.
It's not the same option, because the other one is it was a 1 DTE, so you took it at a different point in time. This one you just want to hedge somehow.
Right. Yeah, that makes sense. Okay. So we got a couple results here. This didn't come out too good. This is what? 1545, 18. Oh, this is 50 and 40 delta. 50 and 20. 50 and 40 didn't do so well. 50 and 30 did pretty well. So 50 and 30, and then 50 and 20 did even better than this. So maybe we should actually go the opposite direction. It's 50 and 20. Maybe we should go 50 and 10.
50 and 10 or 50 and 15. 50 and 15 is kind of popular too. 0.5, 0.15.
Okay. 50 and 15. Same VIX. I'm trying to keep everything else the same. 18 VIX. 15 take profit. Same. Okay. So 50 and 15. Anything else? Yeah, still 50 and 45. And 1 DTE. Yep. And 50 and 10. Okay, let's set back to 20 because that's what our default state is. Okay, so now next thing is we want to add in this whole thing of put spreads. So how do we want to do these put spreads? Do we want to always do put spreads? Do we want to make it so it's just when the VIX is above a certain point? I guess we can make it so when VIX is above a certain point, because then we could just set that value low and it will always do it.
So basically the opposite of what we're doing here, the same idea. I mean, whatever we did that worked for the call in terms of the deltas, we do it by the negative, right? So the deltas for the put would be the minus, right?
Right.
And then the VIX would be the opposite. So if this was like 18, maybe we give it some slack, go like 20, give it like higher than 20. And we can just try a couple of different scenarios on that, see if it even makes sense, even goes anywhere. And then if it does, then we can combine. We can do, if the VIX go one way, do the calls, and if it goes the other way, do the puts. And then the combination should basically complement each other, and you wouldn't have a lot of flat days. You have some more action, basically.
Okay,
right?
so if the VIX is above a certain point,
right now this is pretty fast to just switch, just flip things on this and see what happens.
Yeah.
On
So
the put only.
I'm thinking about how to code this because it does matter what exactly we want to do. I think it should be tied to VIX. So I'm going to set up like a second set of deltas, buy and sell delta for the second ones. And then we probably should say a VIX value of when we should get into them above a certain VIX value, right?
So deltas would be same. The deltas would be same as the deltas that you have for the call, right? Only negative.
Right. Yeah.
There's no difference for when I do it on this side or the other side, I do it the same way. Right?
Yeah. So there's a question here from Noah. Hey Noah, how's it going? Good to see you. Noah's actually a really good friend of mine. He's actually watching us on YouTube. That's cool. Yeah, so above what point? That's a good question. We've been doing this below 18.
Okay.
So I'd say above 18, right? Like we can make that flexible, right?
Or maybe, yeah, maybe we can start it above 18 and then we can give it more slack to later. If above 18 gives us some issues, then we can go like above 20 and change it a little bit later. But
yeah. So buy delta 2. So we'll buy. Good to see you too, Noah. So buy delta 2. By the way, Noah, I hope that the property works out for you. He was just messaging me about that. Sorry, I'm not texting you back, but we're in the middle of something. Hope that works out for you, bud. So buy delta 2.
Delta 5, 50.
No. What I'm saying is that this is delta 1, buy delta 1, sell delta 1, buy delta 2, sell delta 2, right? So the question is, okay, so when we go above the VIX, do we want to do both, or do we want to just do one? Do we want to just do the puts when we're above?
Just put. No, at this point, I think what I'm proposing is just to try, just put by themselves and see how they perform without any calls. And then if during those times that we are not doing the calls, the puts actually make money, then we can combine it. So just to simplify just this back test as an experiment, just do the puts and see if this put by itself makes sense. Then it's very simple. When you combine it, when the VIX is lower than 18, then you do the call. When it's higher than 18, you do the put, and they complement each other. Very easy.
Yeah, that makes sense. We could also make a setting that just does both of them at certain.
You want to just set it up to do both at the same time right now?
Well, right now we could just do one, right? Since you're saying just do one, we could just do one. But then we could also make it so that there's a setting that we could change so that we could try both, right? Because when VIX is high, for example, in 2022, VIX was high. I think we would have done better doing puts, right? Because it's pretty much trending downwards or in a bear market. But in 2020, the VIX was high, but it was shooting up like crazy, right? So we should have actually been in calls then, right? So it makes me think that when VIX is high, maybe we should do a straddle, right? And when VIX is low, we go calls only. That's what I'm.
It makes sense because VIX is high, it means it's going to move. It's going to have some. But you don't know the direction, so it's a good idea to have both. To trigger both if you have a large, very high level of VIX, because it's gonna move to one side for sure.
No, I mean we can do all of those things, but if we do one step at a time, just to see even these puts make sense, just by themselves, make any difference. Right? And that's a quick exercise to see if these puts even make money at all. And then you can just bring the calls in, just combine it.
Yeah.
If these puts don't even make sense, why bother doing all the complex, all the other stuff, right? And then with those straddles, I wouldn't bet too much money on them that they're gonna work because of the how costly they're gonna be. But we can try that also. But at this point, I would just try to put. That's my recommendation. And see even they're gonna move the needle at all. If they don't move the needle at all on their own, then combining them is not gonna, is not gonna do us any good either. I mean, we can do it. If you guys wanna do it, we can do it. But, it's not gonna help. So let's try them by themselves, see what happens. If you usually when you solve a problem, you isolate, isolate things one thing at a time so it's easier to understand what's going on. That's what I'm recommending.
Right. Okay. So so let's just do that. We can start off with that. We can modify from there. All right. Okay. So we have buy delta 2, sell delta 2, buy right. These are puts. And then max VIX. We're not doing the VIX 1 day anymore. I think it makes sense to just do the VIX as opposed to the VIX 1 day, right? Like I think we've kind of come to that conclusion, at least because we can back test it further. But then max VIX 2, min VIX 2. So this is going to be 18, and then max whatever 100, right? Like it's not going to get to that.
Yeah.
I think VIX. What was the highest VIX has ever happened? I'm actually kind of curious.
I'm not sure. I think 100 is pretty high, but it might have been higher.
Yeah, I have a feeling that it was 2008. I think it hit over 100 in 2008, if I remember correctly. I could be remembering wrong. Yeah, look at that. 2008, 79. That's like the world is ending, basically. Yeah, and then even COVID wasn't even that high. COVID was 66. So yeah, so 100 is very well, Okay. Okay, so max VIX 100, min VIX 18. So so now we have these two. Okay, geez, how do we do this? This is starting to add complexity. Let's see. So this is creating the spread. I have to create a second spread. Geez, this is a lot to think about here. If we so you have the check max VIX here, check min VIX. It almost needs to be like a completely different path. So I think we need to pull this out actually. Oh, what happened here? We got a result from something. It's a big drawdown. What was this for? This is 18, sell delta 15. 20 still seems to be working the best. You hit the nail on the head the first time around. Yeah, because even 15, we go in the opposite direction. It's not helping. It's making it worse. Right? Because we got what 50. Yeah, 53% with a 20, 50 20. And 50 15 is a 30. Okay.
Yeah, 20. Yeah, because that's the 20 is the standard. Yeah.
Yeah, I mean, you're definitely right about that one. Not only is the return higher, but the drawdowns are also lower. It's both. And this is, I think, the 10. Yeah, the 10 is not good either. That's a big drawdown. That's scary. 85%. Wow. I'm not touching that. Okay. So 20 and 50 it is. At least for the calls. Keep that. We still have it. I'm wondering about the times too. I guess the time is going to take longer. Oh, these are not looking too hot. I think these are different times. Those are not looking too good either. I think this is the Qs. No, these are Qs. This is taking a very long time to backtest. Okay, so our best one that we have, 20, 50, 1 days to expiry. Still, for some reason, 5 or 345 is the right time to buy. Go figure. I really wonder, like, what if we had, you're right, like, what if we had a longer days to expiry, right? Like, what if we had, you know, even 2 or 3 days to expiry? Because the thing is that buying 0 DTE options are very expensive because your theta decay is quite substantial the last day, right? So maybe it even makes sense to have days expiry even more than 1, right?
Yes, well, the theta actually they're gonna cost more. The more because your theta costs you more. So the longer your expiration, you're gonna have to pay more for the theta, but then you have more runtime for it to actually make money.
Right.
So that's why you pay more. But yeah, I mean, you have a better chance of making money because you're giving it more time that way. Yeah, those are the different things that we can try. But I mean, I mean, going for a lot of this we are doing when these 0 DTs weren't traded and that time frames that we are testing right now, maybe in the future we won't run into those too, that as you were saying before on the other things too. So I mean, running it with these I mean, if it just doesn't trade for certain periods of time and other things trade to make up for it is good. And this putting might help. Let's just try this putting and see what happens.
Yeah.
And then we can try different times and different things too.
Yeah. Okay. Yeah, let's do the put thing. Okay, so let's finish that up. Yeah, you're right, because we noticed that with the condors too, is that the last few years did really well compared to the earlier few years. That's when 0 DTEs came out, right? So there is a big bias there. Okay, buy delta, sell delta, put max min. Okay, and what I think we need to do is we need to take this out. Okay, this gets portfolio value. This gets quantities to trade. Original quantities to trade, total return, stop for today, check max VIX. The stop for today is going to mess with us. There's going to be max VIX. These conflict with each other. One of them is in one situation, the other one's in the other. So stop for today is not going to. So you almost have to make it stop for today 1 and stop for today 2. Last purchases. Oh boy, it's like multi-dimensional. Quantities to trade. Okay, last purchase is 1, last purchase is 2. Fully value at purchase. Okay, so we'll go from here all the way down to here. Yeah, let's take this, refactor it, turn this into its own function. Yep, we'll take that. Accept. Copy this. Strike step size, buy delta, buy right, sell right. So I guess we can go check conditions and create spread 1, and then check conditions, create spread 2. So we could actually, so actually this is the same thing. We don't even have to call this different. We just give it different. Oh, this actually makes a lot of sense. Okay. And this we need to move over. And stop for today. This has to function differently now. I actually think we should get rid of this mechanism. So just stop for today. Actually, but this shouldn't max VIX. This is going to make a pretty big difference because if VIX was, but I guess we're getting VIX from yesterday. We're actually not, we're getting the VIX from yesterday's close. We're not getting it from today's open anyways. So maybe we don't need this set stop for today. Because those values are not going to change regardless. There's nothing else in here that says stop for today. We need take profit percent, stop loss percent. Check take profit is in there. Check stop loss, check take profit. No, this should not be in here. AI does weird stuff sometimes. Yeah, it's doing this. Underlying price. No, we don't need any of that. Sell of assigned. Underlying price. We don't need any of that. Last purchases, get. Okay, I think that should be good. So we check all that. Any of those hit, then we exit. Stop for today doesn't really work anymore. Look at a breakpoint here because I don't know if it's going to hit or not. Okay, so let's check conditions, create spread for one of them. And then we'll buy delta. We have to get all these. Two on underlying assets. I think this should work. It's getting pretty complicated at this point, but I think this should work. Let's go through this. Okay, let's run this in debug mode and let's see what happens. Okay, it doesn't seem to be executing on anything. Why? This needs to get more complex. We have some new results, by the way. Here's a result for this one, and then here's a result for this one. Neither of them are very interesting. Let's try to understand. This one's at 1245. Oh, excuse me.
What happened here?
Yeah, this is not good. Is buying at 1245. That's not a good idea, clearly.
Must be hungry or something.
Sorry, what was that? Must be hungry?
I said, well, people must have been hungry or something at that time.
Yeah, holy crap. That is one hell of a drop. That didn't work out. So that's 1245. That's the change in time. Then 1145.
That's
also
crazy.
not great. Not as bad as the 1245, but also not great. Maybe there's something to the 1545.
No, that's, I guess that time is divine or something.
Yeah. That's a crazy, yeah. Okay. All right. So getting back to this. Actually, can you guys give me 1 second? I'm gonna use the bathroom. Right back. I'm drinking a lot of water. 1 second. All right. Hey, guys. Okay, so let's see where we're at here. Loop through, get last purchases. I feel like this needs to be split up. It's trying to get really complex because there's so many, it's like multi-dimensional stuff going on here. And multiple assets and multiple spreads. Once we do this, we might be able to do like more than 2 at a time, like 3, 4 if we really want to, I guess. Okay, last purchases get underlying asset dot symbol, dt dot date. I think we need to go last purchase is 1 and last purchase is 2. Actually, that doesn't even work there. Or maybe we just get rid of this. Last purchase. I don't know how. Oh, that's going to cause any serious issues or not. But they definitely conflict with each other. Okay, so you check the first one. We go through here. Everything went well. None of the VIX was an issue. So if we get the asset, we got an asset, perfect. We go ahead and we create a spread on this underlying asset. Last purchases. Last purchase expiries is that? We bought with this expiry. This needs to go away as well. Like we need to use something like that. Okay, this one doesn't pass here. Okay, I think this is probably gonna work. This one does pass. Creates that. This one does not pass. Okay, let's see what happens when we just run this now. I think this might work. Pretty wild looking portfolio value. It's fluctuating like crazy. I guess it's 2020. Big moves. I'm just getting the puts. And it blew up. That blew up pretty damn fast. I feel like there's something wrong with that. Like, I don't think it like placed the puts properly. So that went to zero way too fast. I feel like it's calculating the deltas wrong or something for puts because we haven't tried puts yet.
Yeah, the direction might be wrong, but when you have the maybe you're going in the wrong direction because it's negative, you know.
Yeah, it's very possible. I think that's probably what the case is. Because we're looking for like it's yeah, get strike deltas, buy strike. We're looking for less than. So all these things here that yeah, I was starting to slow down too. My brain's starting to shut down. Be good if we can get this algorithm into a working state for. So I could at least give you guys like a working algorithm. Whoever suggested, I forget who it was that suggested it. That was actually a good idea. We should have pushed that change before we actually even went down any of this. Maybe we should get into the habit of like every time it works and there's like a good back test that we like save it. Okay, so here we have a put. And now let's figure out what it buys in terms of deltas and all that. Okay, so whatever adds that. Okay, buy strike deltas. There they are. Sell strike deltas. There they are. So we want to get a negative 0.5, which is not even on this list. Where are we at? We're at 327. So why is that not even on the list? 327. Oh, it is. Okay, there it is. 327. Sell strike deltas. Why are sell strike deltas? Oh, I guess it's stopped at this point because I wanted to get a 0.2 and then it stopped, so it went above that. So this seems right, actually. So if we go buy asset, the buy asset is, so let's put it this way. So the underlying is at 327 and our buy is at 328. So it's pretty much right at the money. And then the sell's at 325, which is out of the money, right? Because 328 and then 325 for a put, right? Go in the opposite direction. I think that's
makes
right.
sense. Yeah,
right?
makes sense.
Yeah. Okay. I mean, I think this is doing what it's supposed to do from what I can tell, but still blows up. And maybe that's just because when the VIX is like super high, like during COVID, we just shouldn't be doing anything. Maybe the max should be, it should maybe be like 18 to 30 or something. But if it's above 30, just stay the hell away, no matter what. Maybe, right?
Yeah, it could be, yes, could be something like that. Let me see.
Yeah, because when we run this, it blows up basically.
Yeah.
Yeah, look at it, blows up there. I think that's right during COVID, blows up. So something happens that just like loses an incredible amount of money very quickly and just goes straight into negatives.
Mm-hmm.
Okay. What I'm thinking is I kind of just want to get this into a working state and call it a night. Like I'm exhausted. I don't know about you guys.
Yeah, of course, yeah.
Yeah. I still got work to do after this. I still got to get our interactive broker stuff working after this.
So the interactive broker works with their APIs, or it still works with the same the
gateway or TWS?
The REST APIs or with the old APIs?
The old APIs is using gateway, but we have a way of running it in the server using something called IBC that can automatically like run it and make sure it's up and running and that sort of thing. So you don't have to run off your computer. You can run in the cloud. And we have a thing that manages that whole experience.
Oh, that'd be great. Yeah. So we can just use interactive broker instead of Trader or whatever, right?
Yes, exactly.
That'd be great, man. Because I'm so used to interactive broker and I like their execution so much.
Yeah, they're very good, definitely.
They're really good at execution. I don't have to even wait for anything. It just goes through so well.
Yeah.
Cool, that'd be great.
Yeah, absolutely. Okay, this is not functioning properly. This blew up, even though I turned off the other things. What I'm going to do, I'm going to save this to GitHub. I'm going to save this to GitHub under a different branch because right now this is like incomplete. I wouldn't mind working on this a little bit at some point. Buying puts over certain VIX level.
Yeah, this may not go very far actually. This may not be even viable, but it doesn't hurt to try a little more. But
Yeah. We'll call this July 16, 2024. We'll call that the branch, create a branch, publish that. And then I'll switch back to main. And I'm going to pull the old one so that you guys can actually use it. Because I know there's going to be some people that want to use this. Lumiwealth strategies. Because the original one was still pretty good, right? Like the one we did last week, I'm still pretty.
the call, yeah, that's one.
Yeah, I still think that was really good. We made all these changes. And even though we backtested it further and we saw whatever, like the only thing I would change is just the VIX, right? To me, that seemed like the most viable thing today.
Yes. And that we found out that we are not stuck with this Wix 1D either. We can just use regular Wix that works just as well. That was a good point.
Yeah, definitely. So I would still do that. Like again, the same thing. It's, you know, even if they blow up every once in a while, but they have huge returns before they blow up, I still like that a lot personally. You know.
But it's strange that it acts so differently just because you change the hour. That it shouldn't be so much different just because you're trading. I mean, it's 1 hour, a couple of hours different.
I've seen that with a Condor too. A couple of hours makes a very big difference. When you pick the time, really matters a lot.
So such a big deal.
Yeah. Okay, so I updated that. Yeah, like I said, I'm pretty gassed, and I still have a lot of work to do after this on Interactive Brokers. So this is fun. You know, I was hoping that we would have had more crazy results. I still think the VIX thing was good, but yeah, I don't know. I'm gonna keep playing around with this throughout the week too. I'll let you guys know if I find any like really cool results. Right.
All right. Cool. Thanks so much.
All right. Thank
Hey,
you,
Robert,
guys.
I'm going to send you the functions that I have, so you can like test it out.
Okay.
You can see.
Send me the whole file that you have, so I can it's easier that way.
Yeah, I'll do that.
Yeah,
Yeah,
okay.
I'll see the whole file.
Okay. Cool.
Okay.
All right. Awesome. Cool. All right. Later, guys.
All right. Thanks everybody. Thanks,
Thank you,
Rob.
guys. Have a good night.